All right. Good morning, everybody. Good morning and welcome. Cindy, you didn't think that message was for you, did you? Wink, wink, nudge, nudge. It's nice to see you guys this morning. Good morning, everybody. E. Webster, nice to have you in here. Cav, Adriana, Josh, all you guys that said good morning earlier, good morning right back to you. Hope everybody's doing well today. Hope you're feeling good, happy. I woke up. That's always a win. That's my first win of the day is when my eyes open. So hopefully I can keep them open for the rest of the day and just kind of do what I do. Um, Lyle, that news was something else, wasn't it? Guys, every morning I check news. Every morning I'm looking to make sure that I don't throw myself in front of that bus. And I'm going to tell you right now, you're going to forget one day and you're going to get run over. I've done it. I think we've all done it. You're done for the day? Nicely done. Go play golf. But I know when news is going to happen. I know where it's coming from because I go to forexfactory.com/calendar every morning, guys. This is really what I do. And I do it because of the reaction that could be in the market. And there's a picture that I dropped right above it. You sound like my wife. I have to listen to you. Guys, the S&P had a 35-point drop. And I want you guys to notice that it went from fib to fib. Pretty cool, right? If you don't believe in the power of fibs yet, watch stuff like this. When the market is screaming from emotion and they still respect fibs, they still respect those key numbers. That's your giant bright light above your head that says, "Whoa, there's something to these. I'm going to learn how to trade from them. I'm going to learn how to trade to them, but I'm not going to trade at them because there are some definite decisions being made at these areas." So I go to forexfactory.com and I look, and at 8:30 a.m. here Thursday, January 11th, there was all of this high impact news, guys. Red boxes mean high impact, means there could be that crazy reaction in the market. NASDAQ was untradeable for a minute, and it was actually kind of funny because it was 8:29. And I told my brother via Skype, I was like, man, there wasn't much of a reaction on the news. And right when I typed that, 8:30 hit and it went sideways. And he's like, really? I was like, oops, my clock is a minute off. My internal clock was a minute off. So I'm always looking for these guys. At 101, there's a 30-year bond auction. Good morning, Cav. Have a great morning. We'll see you around 10:30. This is medium impact. This could actually have a little impact on the news as well. So at 101, if you're trading, be aware that that could be a market mover. But I check it every morning, and I like to bring this up, guys. I don't want to be in the middle of that, right? I don't want to be thinking that the long trade is the right trade and then have it just smash against me because what's not uncommon is to get slipped out, to lose extra money if it's super violent the other way. So you're creating your first advantage by knowing when news is going to release. And then when we talk about rules today, and that's really all we're going to talk about, we're going to talk about rules and advantages and all the great things that you can have on your side as a next gen user. It all comes from the education page. It all comes from the tutorial section. And there's really not any secrets with what I do, guys. I try to keep it as simple as possible. I try to keep it as focused as possible. I try to give you every opportunity to not outthink yourself because that's really what we do a lot is we outthink ourselves and we kind of I don't know if one is good, two is better, right? It's just that mentality. So we're going to focus heavily in the first hour on what we call a high probability trade. I'm going to slow my roll a little bit today and we're just going to kind of ease into it. But a high probability trade means that every indicator on every chart agrees for the trade, guys. You're going to have the strongest trigger lines. You're going to have nothing in your way between you and your targets, none of those termination conditions. And this is a trade that the way it's taught, the way it's presented, and if you're able to follow the rules, is a trade that typically wins 70 to 80% of the time. This is a trade that builds a lot of confidence, guys. It really does. I see it all the time. When you win a couple trades, you feel great. There's that serotonin and life is good and you don't feel sweaty palmed or fast heartbeat. And the idea is that this high probability trend trade is going to give you that feeling more than it's going to give you that, oh my gosh, what did I just do feeling? And that's a real part of trading too when you're learning. Excuse me. So this high probability trend trade, guys, it keeps you on the right side of things. It gets you into the mindset of thinking in terms of advantages every time you look at your chart. What am I looking for? I'm looking for advantages. I'm looking to have trades where there's more going in my direction than there's not. And by going after this high probability trend trade initially, what it does is it turns you into a chart reader. And this is the greatest gift that you can give yourself is doing a little bit of study and becoming a chart reader, being able to understand where the market is likely to continue and being able to use that point for an entry and where the market is likely to go, knowing where it's appropriate to take profits, and then finally understanding where the market is likely to stop. And that is not trading into these key areas where decisions are being made, where the people that move the market are buying and selling and all that sort of stuff. And Gary, you're up $1,000 on 3 trades. Demand a clear path, right? What a thought. Um, I tell my brother and I talk about this every day. Guys, I hate termination conditions. Termination conditions are those lines on the chart where buyers buy and sellers sell and profits are taken. And the closer you trade to these areas, um, when you trade into them rather than from them, it's a huge problem for you. It really is. So we're going to become chart readers here in the first hour. We're going to focus on the highest probability trend trade, and we're going to let it lead the way. We're going to let it kind of dictate whether or not we're in the market. And this high probability trend trade is only 3 rules. It's not 3 rules with addendums. It's not 3 rules with these little caveats off to the side. It's just 3 rules, guys, and each rule gives you an advantage. And each advantage placed together is the recipe for a trade. And crazy idea, start thinking in terms of if my rules are met, I'm taking the trade without hesitation because that's what my plan says. But if my rules aren't met, I'm going to avoid taking trades because I don't have the advantages I need to feel as though I'm in a situation that wins more than it loses. And it can be that simple. And a trade is momentum. And a momentum comes from the large chart. It comes from strong trigger lines. This is rule number 1. And a trade is taking that momentum and making sure that there's nothing in the way to stop it, making sure that you have a clear path. And that's not trading in determination conditions. That's rule number 2. That's avoiding those likely to stop areas because they can reverse the market. They can create untradeable bounces. And then finally, a trade, you add in an entry area, the point where the market is most likely to continue. And you guys are going to be able to pinpoint this with unbelievable accuracy. It's a lot of fun when you get good at entries because you kind of do that little strutting around. You're like, man, did you see what I did? I'm like a sniper. I knew where the market was likely to continue. I entered right at it, and dag nabbit, I'm getting paid. And it's a wonderful feeling, guys. So 3 rules are going to turn you into a chart reader. These 3 advantages are how I want you to speak to yourself every time you take a trade. I have this advantage, write it on the chart. I have this advantage, write it on the chart. My entry has the advantage of where the market is likely to continue. Write your rules on the chart. Use the annotation process very much because what you're doing is during this learning process, you're reinforcing a look with the advantage that it produces. And the more times you type it out, the easier it becomes. These 3 rules, they happen on 2 charts. That's it, just 2 charts. You're going to see people posted a lot of other charts in here, and there's uses for all these other charts. But until you are comfortable with the easy trade, until you're comfortable with the simple trade, with the very focused approach, guys, don't give yourself the burden of overanalysis. Don't give yourself the burden of multiple charts and conflicting views. Keep it simple and let the large chart lead the way. Your large chart is a broad stroke of a brush. It's the overall opinion of the market. It's what the people that move the market want to have happen. Your large chart will define the direction of the market. If everybody's going up, it's easier to go up. And if everybody's going down, it's easier to go down. And I love easy. Your large chart will define momentum through rule number 1. It'll make sure that you have a very distinct advantage before you take any trade. And it'll also determine the areas that can be problematic, the areas that may stop the market, that may create a bounce. And all of this happens on the most current bar on the large chart. That's it. Just one bar will give you all of this information. When your first 2 rules are met on the large chart, when you have the advantage of momentum, when you have the advantage of a clear path, you're going to turn your attention to the right and you're going to look at this smaller, faster chart. And the smaller, faster chart does nothing more than refine the broad stroke of a brush. It is not your decision-making chart, it's your entry chart. The big decisions are made over here. This is going to take the one bar, the most current bar, and it's capable of breaking it down into about 15 to 30 bars. What this does for you is it lets you take fluctuations, movement within that large bar, and pinpoint exactly where the market is most likely to continue. And rule number three is your entry rule, and it's going to get you in at that point. And it'll be pretty staggering just how effective it can be. So two rules, three rules, two charts, excuse me. Good morning. Large chart leads the way. Large chart tells you when it's time to look for an entry. Entry chart is just that. It's an entry chart. Large chart is what the large crowd wants to have happen. The people that move the market, the deep pockets, the guys that are not you and gals. Small chart is what the small crowd wants to have happen. These are the people that will fight trends. These are the people that have just enough money to shove it the other direction for a second. We rely on these small crowds to get us into the market at the best of the best spot. And we're going to define exactly what that is in just a minute. But before we do that, the old memory, the old reminder, guys, I am a broken record. I really am. If you really want to become a confident trader ASAP, if you're like, man, I want to get there as soon as I possibly can. I don't want to mess around. I don't want to drag my feet. I don't want to get sidetracked. It starts with posting your trades in class, guys. So this class is designed to be interactive. This class is designed that every time you post in the room, whether it's a question, whether it's a picture of a trade, whether it is your personal analysis of what's happening in the market, every time you do it, you get a private session with me. You and I are going to look at your chart together. We're going to talk about what you see, what you don't see. We're going to talk about what you did. But the key to the success on you posting your trades in class is you have to tell me why you did what you did, because don't make me read your mind. Don't tell me I went long here, right? Well, why did you go long there? What were your advantages? What made you feel as though the long was right? And what we're going to do is we're going to break it down and we're going to speak in terms of advantages. And the ultimate goal every time you post in the room is to get you one step closer to where you want to be. The most advantageous pictures that you can post are pre-trade pictures when you're telling me why you're about to get in the market before you ever do. Post-trade pictures, you can tell me why you got out of the market. We can work on management. Showing me a picture of your entry. Guys, I take 3 to 5 pictures every trade that I take. Um, I take one before, I take one when I enter, I take one halfway through, and I take one when it's done. And I do this because I want to analyze the whole process, because I want to make sure that things haven't changed. I want to make sure that I'm not making mistakes. And I do the same concept with my brother. He's my coach, the way I get to be your coach. Um, and I look for help on every trade that I take. I post it in there to make sure I'm not missing something. So post your trades in class, annotate your charts, talk about what you see, what you think, what you feel. And then the other thing is use the spreadsheet that Nexgen provided. This is one of the most underused tools. I'm going to drop mine in the room right now. But this spreadsheet, the first page is just a trade journal, guys. Recognition comes through repetition. And repetition isn't just taking a trade, winning or losing, and then moving on. Repetition is taking a picture of the trade, writing why it was good, why it was bad, why it worked, why it didn't work, what made it feel easy, what made it feel forced, and then coming back the next day and studying that picture and saying, man, this was 32 flavors of kick ass. I want to do this every day. Or I keep trading into these damn lines. I need to stop this habit. And you're going to recognize patterns in the market that bring you success. You're going to recognize patterns in yourself that are robbing you of that success. And guys, that's one of the places where I feel like I excel running this room is I'll begin to recognize patterns in you. I'll begin to recognize where you're willing to take chances, where you're not. I'll begin to recognize and actually kind of get in your head and know what it is you're thinking. And we're just going to work together to fix it. And you're going to look through it each day and set yourself up for the day. I'm going to stop trading into termination conditions. I'm going to stop fighting the small triggers on NASDAQ. I'm going to start doing this, and I'm going to accelerate my learning. So use the spreadsheet. Make sure that you're filling this out, guys. I can't stress that enough. And when you take a trade that fits your rules, when you take a trade that's making you money, that it's a pattern that's bringing you success, take a picture of it, annotate it, drop it into your personal trade setups, because the reality is you want to be able to do this over and over. You want to be able to take this amazing trade every time it sets up. You want to be able to repeat this process, and that's what writing all of these things on here does for you. And then the third page is the client trades, guys. This is about almost 300 pictures of you guys using the software. Almost 300 pictures of taking high probability trend trades, medium probability trades, embracing advantages, getting in where the market is likely to continue. This page also has my thoughts on NASDAQ. I've done a lot of study, excuse me, and I have blown out a lot of Apex accounts, learning to trade the NASDAQ as efficiently as possible. I'm sharing it with you right here. If you're a NASDAQ trader and you need some help, I want you to raise your hand. I almost trade NASDAQ exclusively. I'm a big fan of it, but I'm also really good at reading my charts, and I can read them quickly, which is what you need for the NASDAQ. So for the new user, crude oil, S&P, they're easier charts to learn on. I've got ideas on management. As you guys present pictures in there, we start to see common occurrences, management mistakes, management successes. There's a lot in here. Patterns that repeat themselves, and then a lot on terminations, because terminations are important. Josh, I always start with a 24 tick stop. I've got a $100 first target, and I've got a $200 second target. And then in my own personal trading, I'll adjust those targets depending on the conditions. Absolutely. And just for the record, guys, on the NASDAQ, Josh, 24 ticks is only 120 bucks. It's no different than 12 ticks on crude oil. The monetary is the same, but it gives you that reaction time. So your goal, ladies and gentlemen, is to make your favorite looks page. This is your page. This is your personal trade plan. Is to make your personal trades look like this one, to fill it out with your pictures, your annotations, because every time you do it, you're one step closer to getting to where you want to be. You're one step closer to understanding the trigger looks so that they become easy, understanding the fibs, understanding the terminations, and you're doing that through the repetition, through the recognition. We're going to take the first hour to learn the rules for the high probability trend trade. I am going to give you a checklist to be able to take it. I'm going to give you a checklist with pictures so you know exactly what you're looking for. And I'm also going to give you a very concrete plan designed to optimize your chances of success. I want you guys simulating. Simulate over and over. And Gary's absolutely right. The fastest way to learn is to post clearly annotated charts with your checklist. That way Mark can review with you. And if you don't have a checklist, if you can't put a checklist on there, type the rules out. Simulate. Post in class, guys. Let's make sure you're not breaking rules and taking chances. We're going to simplify high probability trend trade. We're going to talk about one medium probability trend trade. And a medium probability trend trade means that you knowingly forfeit one of these advantages. And when you forfeit one advantage, it decreases the chances of success a little bit. Absolutely. How could it not? But what it does is it puts you in the mindset to manage a little more assertively. It puts you in the mindset to take quicker profits, to focus on getting paid, getting to break even, and getting out if things change. I'm going to give you a solid plan for this one as well. But this is our first hour, guys. What looks are you going to commit to? In the beginning, commit to the easiest, right? You're going to grow from it. It's a stepping stone. Take a ton of pictures, flood my room with pictures, clearly annotated charts, and simplify. Let's keep it easy today, guys. I had someone ask me yesterday, Mark, what's the quickest way to get to where I want to be? The quickest way is to not confuse it. Don't muddy it up with a bunch of information that you don't need. Let's start with rule one. What is rule one? Strong triggers. Why do we focus on strong triggers, guys? Because strong triggers break things. Strong triggers break areas. Strong triggers push the market in the direction that it's already going. Strong triggers will even cover some of the mistakes that new users make. Strong triggers are the key. This is the first advantage that you're going to give yourself. And the only way that you can ever have strong triggers is if you're trading with the direction of the market. Large chart defines direction. So if the background is green, where it's going up, and if it's going up, you're only looking for rules to be met for high probability trend trades long. Guys, this is keeping yourself on the right side of stuff, not fighting what the large crowd wants. If the background is red, it's going down. You're only looking for rules to be met for high probability trend trade short. Not I'm going short because it's red, but I'm looking for my rules to be met. I'm looking for my three advantages to be in place, and I'm going to trade with the direction of the trend. You can only have strong triggers. The only way to have strong triggers is if all of your colors agree. If your background is green, your small triggers, these solid lines, they have to be green. And if the background is green, your large triggers have to be green. If the colors don't match, you do not have rule number one met. And it can be that simple. Strong triggers is like scissors opening. When your small triggers break above the large triggers, when they begin to separate, to accelerate away from them, picture scissors opening. You can almost see it, right? There's the little pin, there's your bottom blade, there's your top blade. When the scissors are open and the wider they get, the stronger your momentum. This is what we call strong triggers when they're wide open, when that gap is in there. Everything is strong in the direction of the trade. Strong triggers means that the odds are favorable for the market to continue up in this case. Odds favorable momentum is exactly what you're going to hear in the room all the time. Did you have odds favorable momentum? Was this your best of the best look? Is this a look that's likely to push the market? And if the answer is yes, guys, it's going to fix a lot of problems that you have. When you have strong triggers, whether it's to the upside or notice the exact same look to the downside, it's just flipped over in red. Um, this is the most favorable look for buying Fibonacci support on a smaller, faster chart to go up with the momentum, or for selling Fibonacci resistance on a smaller, faster chart to go down with the momentum. On your large chart, this slow moving chart, this tortoise of a chart, you're not going to see those retracements that you'll see on a small chart. You're not going to see those fluctuations that you'll see on the small chart. But after the bar has printed, what you may see is one of these tails, one of these wicks. This black line is the movement on the smaller, faster chart. This is your refinement. This is how you guys are going to get into the market, not on the large chart, but the small chart. But you'll be able to pinpoint exactly where the bottom of that tail is likely to happen and exactly where the top of this tail is likely to happen. This is important, and I mention this because you're going to use this to study. You're going to be able to go back and just circle these tails on a large chart and see if they lined up with an entry on the small chart. So strong triggers, guys. Let's go to the live market and see if we have it. Strong triggers means, goodness, I've got so much open. The background is green, the market's going up. This happens to be the S&P. Smalls are above the large are wide, they're angled in the direction of the trend. Give me a Y if you're with me, if you can see that this is in fact strong triggers. You also saw it over here and the market continued up, and you saw it over here and the market continued down. Isn't that freaking amazing? Strong triggers is your first advantage, guys. Strong triggers is going to lead the way, and that really is how simple rule number one can be. Well, if we can have strong triggers, we can have weak triggers, guys. If strong triggers mean that the odds are favorable for the market to continue in the direction of the trend, weak triggers means anything can happen up or down. So your scissors open, the wider they get, the stronger it is. As they begin to close, you can visually see the momentum going away. The momentum's still pretty solid until they work their way inside of those triggers, until you begin to lose the momentum. They go inside, and this is a weakening of the large triggers. And when I have weak triggers, anything can happen up or down. And you'll see weak triggers very often preceding a reversal. You'll see weak triggers creating a stronger push against the trend, even if the trend is going to continue. So as your scissors close and the smalls work inside, there's your reversal, guys. Just out of the lesson plan, but this is the S&P Live this morning. As the smalls begin to close in on those large triggers, you notice that we start to lose that momentum, and it happens over and over. Weak triggers, there's a big push, and it continues down. This was even during news. Strong triggers, but into areas, strong triggers, but into areas. So we're going to couple all this together so that you guys can take the absolute best of the best. So is everybody cool? We're cool with that, right? Strong triggers lead the way. Strong triggers do not happen all the time. Guys, this picture doesn't even have fibs on it. It doesn't even have mid bands or one-to-ones. But you can see from the left side, odds favorable momentum, OFM, pushes the market down until it creates those weakened anything can happen triggers. I've got it annotated ACH. ACH, there's your reversal. Don't even have the benefit of a fib here. Whoop, Siri's trying to pick up on me. From the reversal, they create odds favorable momentum again. And I say they because it's not you. It's the people that move the market. They create odds favorable. There's your tail. This is where you guys pinpointed an entry. And off it goes until they're weak, and you get a reversal. It creates odds favorable. You get a tail. And then we get into a bit of a transition phase, guys. Remember when I said that all the colors have to match to have rule number one met? I want you to see here, the small triggers are green, but the large triggers are red. You do not have odds favorable momentum. Rule number one isn't met. It's okay to sit on your hands and do nothing. From there, you get red triggers and a green background. Once again, rule number one, impossible to be met. You don't have the advantage of momentum. This is what it looks like when the buyers and sellers are fighting each other. This is what it looks like when the powers that be can't come to an agreement or the other one can't overpower. It's like a wrestling match. This is where a lot of people are tempted to predict what the market will do based on a color. Some people pick the trigger, some people pick the background. Most of them just lose a lot of money because there is no advantage here. You're caught in the middle of a fight that you don't want to be in. This is where next-gen users have the advantage. If you really embrace the idea that if your rules aren't met, you don't take a trade, I see next-gen users sitting on the sidelines, waiting patiently, sometimes up to an hour, 2 hours, for these guys to finish fighting. And then when they're done, that odds favorable momentum shows up, and sure enough, they find an opportunity to go with the flow, to go with the trade, to go with the momentum, the advantages, all that good stuff. So rule number one, guys, it's designed 100% to keep you on the right side of things. Look at that market push up. Strong triggers break things. In this case, it broke Fibonacci resistance. Um, Over here, strong triggers broke support. Strong triggers broke resistance. You're going to see a little bit of theme here. And you're going to know that those lines are where decisions are made, guys. Those lines are where buyers buy and sellers sell. Those lines are the points that can be considered a termination condition. And a termination condition has the power to reverse the market, to stop the market in its tracks. A termination condition can create that fight between buyers and sellers. So when we approach and we come to one of these lines, you guys are going to get a simple recipe to know whether or not you should be sitting on the sidelines. But first, let's talk about the areas that can be. The areas that can be termination conditions, divergence, highs, and lows. A magenta line from a pivot at a high means that there was a loss of momentum. It is a very, very exact line in the sand where the buyers stole or where the sellers stole momentum from the buyers. A divergence low line is a very exact line in the sand where the buyers stole the momentum from the sellers, and you'll see it print off of a pivot. All this is a loss of momentum, guys. It's not a termination condition. It's really not even a cause for alarm. It's just a visual representation of a loss of momentum. We're also going to look for red Fibonacci resistance, blue Fibonacci support. We're going to look at these yellow one-to-ones. Sometimes we're going to use a mid-band. But guys, I want you to think of these lines on the large chart as the places where decisions have the potential to be made. The places where buyers take profits and maybe sellers enter. Where maybe there's a fight, where one side wants to get through and the other side doesn't want. And sometimes it's going to be where buyers get out and sellers get in. So you can recognize these, and we're not going to trade into them. Terminations, false. Room to the profit targets because we want to make money. And we're going to be able to recognize these with a simple recipe. And I'm going to go back to the user guide and I'm going to go to the tops and bottoms section. And I'm going to give you the very simple recipe, guys. We're going to keep it simple. We're going to keep it focused. And for my brand new users, for my high probability trend trade users, there are only two options. And I'm going to show you exactly what they are. The first option is it's a termination condition. So when price reaches an area, when price comes to Fibonacci support, to yellow one-to-ones, to a divergence low or high, the only thing that you have to do is ask yourself, where are my triggers? Price reaches the area is the first part of it, guys, because when price reaches an area, the decision-making process begins. When price reached Fibonacci support, the triggers remained above. We've reached a termination condition. It may create a full reversal. It may create an untradeable bounce, or it could break. But the reality is I don't know, and I want you to be okay with not knowing, not having to predict. So when price reaches an area and the triggers remain above support or below resistance, we've traded into a termination condition. The market has reached an area that may stop it, that may create a bounce, that may create a fight. So here's your termination conditions at a low, guys. This is the first piece of the puzzle on terminations. Price reaches the area. The same trigger lines that give you momentum remain above. Don't go short. Sit on your hands. Do nothing. They may fight. It may reverse. It may end up breaking. I don't know. Price reaches Fibonacci support. All the triggers are above. Don't go short. It's a termination. And again here, here's a divergence low, that loss of momentum, right? Not a termination condition, but when price reaches the divergence low and all of my trigger lines stay above, well, now it's a termination condition. And if you can have them at a low, well, you can have them at a high. There's that divergence high, just a loss of momentum, no big deal. But when price reaches it and the triggers remain below, you guys know not to go long. Even with odds favorable momentum directly into resistance, triggers remain below. You guys know not to go long, to sit on your hands, to wait. Thank goodness. One-to-ones and resistance, triggers remain below. Guys, termination conditions are the most broken rule with new users because we get the fear of missing out. We're afraid that we're going to miss the big move. But if you embrace this recipe, it's going to keep you on the right side of things. It's going to keep you from trading into these decision-making areas. It's going to keep you from going short when that market may create an untradeable bounce. That one would have taken you out. It may create a reversal. Is everybody okay? That's the first part. When is it a termination? When price reaches, triggers don't break. Don't trade into it. It's that simple. Well, when do I have a clear path? My rules say that I have to have a clear path. So price reaches this Fibonacci support up top. None of the triggers break, and you guys say my best bet right now is to pump the brakes, to pause, to wait for the reaction, to see if it breaks, to see if it holds, to see if it reverses. When your small triggers and your large triggers get below this area, support begins to act as resistance, guys. Now the path is clear. Now we're looking for rules to be met. And you'll see that we did. We did have odds favorable momentum. Small and large, clear the area. Support acts as resistance. We haven't reached the next area. You guys are pinpointing right where the top of that tail is most likely to happen, guys. This is the magic of what we do. The patience that the software provides is amazing. You just have to learn to embrace it, to harness it. Odds favorable, haven't reached the next area. There's your tail. This is where Nexgen users are pinpointing where the market is likely to continue and taking it all the way to the next key area. That's a great profit taking spot, at which point you're going to sit on your hands and wait a minute. You're going to wait and see what the reaction is. So termination conditions, guys, they're designed to keep you safe. They're designed to keep you focused on having a clear path. And this is the simple recipe for new users right here. Guys, steal my pictures, please. Price reaches the area, no triggers through, it's not broken, no clear path, sit on your hands and wait. Small and large, get to the other side of the area is now broken, the path is clear, let's look for our rules to be met. This is the new user, guys. This is day one, day two, week one. But we're not going to keep you harnessed into only high probability trend trades. We are going to look for what we call a medium probability trend trade. And I'm going to give you the same picture with an addition, guys. Small and large through the area means that it's broken. It means that you have a clear path. Absolutely no triggers through the area means that the area isn't broken. It's a termination condition. You do not have a clear path. Strong triggers break things. I said that when we talked about momentum. Strong triggers can break key areas. Strong triggers can get everything to the other side of resistance and make it behave as support. And strong triggers breaking an area starts with the small triggers absolutely smashing through the area, guys. 50% of your trigger lines get above the area, not just a little bit, but with some pretty mean authority. 50% of your trigger lines stay below. That's your large triggers. 50-50. That's what we're going to call this look, guys. This is a 50-50 look. It has nothing to do with your chances of winning. It has everything to do with the trigger look. If 50% are above and 50% are below, and I have odds favorable momentum, I have strong triggers, and this is a mandatory part of areas with the potential to break. Strong triggers have the potential to break things. So this fib 6980 has the potential to break. It's not a clear path. It can't be a clear path because the small and large aren't on the other side, which means that I'm willingly forfeiting one of my advantages, which means that I'm not going to give up momentum. I'm going to make sure that I don't give up momentum, and I'm not going to give up my entry area. I'm going to make sure that my risk is small, that my area is concise, and that I can take a shot at a maybe trade. I can take a shot at a potential to break with the highest advantage. And that's the second part of the plan that I'm going to give you guys today. So we're going to do a quick run through. I just want you to see it. If you need me to slow down, if you need clarification, if you have a question about it, I need you to raise your hand, guys. All of your faces in your little pictures are smiling and happy. I can't see if you're confused. Price comes down, triggers break support, not a termination. But the buyers say, you know what, sellers, we're going to take it from you. There's that divergence low, that loss of momentum. It's not a termination. You guys are going to have indecision in the triggers, and you're just going to wait a second, and you're going to say, you know what, price reached this divergence low. All my triggers remained above. Now it's going to be a termination condition. This is what we call a pivot stop out of a prior divergence line. I'm just going to call it pivot stop out, PSO. You'll see it annotated. If this termination creates a full reversal in the market, guys, this is a strong bottom, and the strong bottom is a precursor to the highest probability trend trade that you can take. And Lyle, you said the S&P this morning was a clinic. It was incredible how the market followed all the rules. It is exciting to watch. And when you have a day like this, it starts to build trust, doesn't it, Lyle? You start going, man, there may be something to these patterns. And it's not that the S&P is following the rules, is that the rules were designed on the patterns that the market creates, guys. That's what creates the statistical advantage. So terminations that create a full reversal, guys, strong bottom. No triggers through terminations that cause reversal, strong bottom. Pivot stopouts are even more powerful when you lay them on a fib, guys. And this is a great picture reminding you that 90% of your day is spent waiting for advantages rather than hoping to be in every move. Everything is up. The buyer's in control. You're even getting your small triggers breaking above your large. And then it reaches. It reaches that area of Fibonacci resistance. Half of you are hoping that it breaks even without odds favorable momentum. The other half of you said, man, I remember class. Price hit that key area. Decisions are being made. None of the triggers broke. I'm going to sit on my hands and wait and see what happens. And none of you lost money into that termination condition. And it pushed all the way down to Fibonacci support. The buyers had a pretty good shove. But what happens when it gets to support, guys? All your triggers, they don't even follow. And I've got a termination condition down here. I can't go long and I can't go short. And some of you are starting to sad face it. Man, I just want to be in a trade. How can I make money if I can't get into a trade? And then the buyers start pushing. And you guys get excited and it goes right to resistance and all the triggers remain below. And some of you that don't even swear in your normal life say something a little off color because now you can't go long. And you hit that divergence high and you can't go long. And you get the second level of divergence and you can't go long. Well, I mean, you can, but it's silly. And you've just spent the last 30 minutes saying, I can't go long into resistance. I can't go short into support. I can't go long into the next resistance. This is that 90%, guys. This is that 90% of your day spent chart reading, waiting for advantages. And this is where the magic happens. When this termination creates the full reversal, it's a strong top. From that strong top, when you get odds favorable momentum, that's rule number one met. Because this bar has not reached Fibonacci support, your path is clear. Rule number two in the books, and guys, there's that tail. This is where you guys can take advantage. This is that 10%. That's that high probability trend trade. And the high probability trend trade rules met that happens after a termination, those are the ones that tend to run. Those are the ones that tend to break the next area. Um, it went from fib to fib, Lyle. Almost on mine. We went from a mid-band termination straight to the fib. Pretty cool. But do you see how weak triggers gave us a deeper push? Doesn't this look like what we just looked at? Little push, little retest. Let's wait and see what happens. I don't know what's going to happen, but I'm excited to find out. We'll see if we get the rules met. Looks very similar, doesn't it? I'm going to show you guys another here, and this is the one that I love to show. In this particular picture, your sellers are full tilt boogie to the downside. They are odds favorable and cranking. It is an angry bull in a tiny little china shop, and then they hit head first into these yellow one-to-ones. And when they do, all of you amazing people say, well, shoot, my triggers are above those one-to-ones. I'm going to sit on my hands for a second and see what happens. I'm going to wait just a minute and see if the buyers have anything in store. And sure enough, they did, guys. Check it out. The buyers push and the sellers fight, and the buyers push and the sellers fight, and the buyers push and the sellers fight. And the triggers, the colors don't match. None of my triggers are above resistance, and none of my triggers are below support. Guys, this is that transition phase, 100% defined between two areas. This is consolidation. This is the fight between the buyers and sellers that next-gen users never have to get caught in. You don't have to go long because it was a termination, only to get stopped out because it's a termination. You don't have to go short at resistance, only to get stopped out. What you have to do is let them do their thing, the 90%. Eventually, everything gets to the other side of resistance, right? You get odds favorable. The path is clear, and there's your tail, guys. Let's go to the next area. This is your highest probability trend trade. This is the one that typically wins 70 to 80% of the time. This is the one that creates confidence through the memory of success, guys. This is the one where on bended knee, I beg you to learn the rules and the advantages and what they look like for this trade so that you can become a chart reader, so you can open doors to find more trades, to get more opportunities, to manage more efficiently. Is everybody okay with the idea? Price reaches, no triggers, no trade. Small and large get to the other side. Giddy up, game on, right? That's the basic. Sometimes the market turns from nowhere, even with a clear path. And sometimes, even with a clear path and odds favorable momentum, that darn market cranks to the other side. Um, Steve, I use Norton Utilities for computer optimization. I defragment every morning and go to optimal game performance every morning. I'm not sure what I use for virus off the top of my head. I think I've just got the basic McAfee or something like that. They've got the virus version and then they've got the utilities version. They're two separate things. I'm sure everybody uses something different. Guys, this final termination condition is a small chart termination condition. On the large chart, we define areas. The large chart defines momentum. The large chart defines areas. Lyle, what I was saying, whoops, sorry, is I use this bad boy right here. Where'd it go? Every morning, guys, I go through Norton and I fix any issues that are on my computer, and I go to speed up and I reclaim all of my memory. I have it defragmented, and then once I've done that, I put it on ultra performance gaming. I do this every morning. This is my ritual each and every morning with Norton Utilities. It was introduced to me by my brother, and I put a lot of faith in what he says. He's pretty smart. Three divergences in the same location on the small chart, the only small chart termination, guys. The only. We use lines on a small chart to enter the market. We use lines on the large chart to know when to not enter the market. But three losses of momentum, three cyan lines from a pivot, three magenta lines from a pivot. Guys, three divergences in the same price range can stop the market, reverse the market, create bigger pushes in an otherwise strong trending market. When you see three divergences, this is a termination condition. Rule number 2 is not met. So it keeps you from looking for that last short. It keeps you from looking for that last long. Three divergences becomes even more powerful when the small triggers work their way inside of the large triggers. When you get those anything can happen triggers, even on a small chart, you couple the two and it becomes a more powerful termination condition. And then when that third pivot is higher than the previous from a low or lower than the previous from a high, you're creating a head and shoulders pattern, and that adds even more fuel to the fire. So if I see three divergences, I'm not going short, right? Or maybe I'm using it to manage out of a short that I'm already in. If I see three divergences from a high, I'm not going long anymore, or I'm managing out of a long that I'm already in. If I see it with weak triggers or that pivot discrepancy, then I'm staying out of that one. This is a small chart termination, guys. It'll happen on the large chart, but a large chart moves too slow. Three divergences at a low or a high will help you identify change that you can't see on the large chart. So even though it's odds favorable in a clear path, three divergences up here, and you'll see it, tells you don't take that last trade, don't take that last long. It may push lower, it may go the other direction. It's not guaranteed to, but the potential is now there. And when the potential is there, you don't have a clear path, and rule number two is not met, guys. And without momentum, right, without a clear path, why are you risking your money? So guys, that's rules one and two. This is the large chart leading the way. It may go down, C-Dub. Whoa, did I just do that? I wasn't even looking at crude. It may go down. I don't know. I don't make predictions. I refuse to make predictions. So C-Dub, so and it's not on you, but I'm gonna show you something. You just said C-Dub you said it may go up. So let's do this real quick. Guys, what do we know about, yeah, what do we know about our indicators so far? Whoops. C-Dub, what direction is the market going, up or down? It's going down, right? Describe the momentum for me, that huge gap between small and large to the downside. Would you say that's odds favorable, the strongest look we could ever hope for, the best of the best, and the market's likely to continue down? So what you just did is the number one cardinal sin. When every one of your indicators says down, you're like, hell, it may go up. Why? It's so much easier. You're in the lazy river, brother. Where do you see divergence? I see two. Down, 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 down. So if it's gonna go up, it'll go up, right? But why not focus on the best? I've got strong triggers smashing through, odds favorable. I'm below resistance. Everything says down, right? I'm not even going to entertain the idea of a long trade or that it may go up until even my small chart starts to change colors, until my small chart starts to change direction. Right now, the only thing I'm thinking about is looking for opportunities to come off of this pivot stop out with nothing but momentum and see if the momentum and the direction are going to win. And it may go up. You're absolutely right. But if I'm a betting man, I like momentum. And C-Dub, there you go, brother. There's a pretty good push, right? Seller said, uh-oh, Nexgen's indicators say we're pushing down strong. Let's see if we continue. And it may not. If I get a third divergence here, I may change my tune. But until I get at least a third divergence, man, I'm sitting on my hands. I'm waiting. I'm only going with the direction of the trend because it's easy. Large chart defines direction, momentum, and areas. That was class, C-Dub. That was class because you're not the only person thinking about longs there. That's what class is. Large chart says up. Large chart says momentum. Large chart says I haven't reached an area, guys. Rules are met on the large chart. The large crowd has told me what they want to have happen. I can see it visually. I have the advantages. Now I need this group of yahoos over here. This guy with a pretty good bank account, but not enough to beat these guys. I need him to give me a shove. I need him to get me my rule number three rules. And rule number three says that I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So I can use a limit order. You guys are going to wait for the market to come to you. You're literally going to have an order waiting for the market, for that small crowd to do a little shove back. You're going to buy or sell a retracement. That's what the shove back is. It's just this little move up against a downtrend or a little move down against an uptrend. And you're going to do it. You're going to have that limit order waiting at an area. And when we talk about an area, we're talking about fibs, mid bands, or yellow one-to-ones. Um, These are the areas that can create a bounce on a smaller, faster chart. The way we use lines for terminations on a large, we're going to use as a launching point on the small. But the key is that I want these areas to be inside what I call favorable large triggers. And favorable large triggers means that on your small chart, the synthetic triggers and the large triggers are overlapping. They're one on top of the other. Snakes riding piggyback. Because the tighter these two sets of triggers are on top of each other, the less room there is to put an area inside of them, the less room there is for fibs, midbands, or yellow one-to-ones. And those are the bounce points. Absolutely, Lyle, we will. So what I'm going to do, guys, is I'm going to look for areas inside of favorable large triggers. I dropped the picture in there because it creates the smallest window of opportunity, the smallest point where the market is likely to continue. So I'm going to use a limit order to buy or sell at an area inside of favorable large triggers. And this is rule number 3. Large chart 1 bar gives me everything I need to look. We're going to refine it now. We're going to break it down into 15 to 30 bars and pinpoint where the market is likely to continue. So when the large chart says go, this is a small chart, guys. Strong triggers, everything is up, everything is cranking, life is good. And we're just going to look down. Where are my favorable large triggers? Where are my large and synthetics? And what are the areas that are going to fall within them? We've made the decision to take the trade, but we're not taking the trade yet because we need the small crowd to do their thing. The small crowd starts their push with a reversal bar. And once they push, once that reversal bar prints, you're going to create a window of opportunity. You're going to create and pinpoint exactly where the market is most likely to continue. Not guaranteed to continue, but most likely to continue. So the large chart says up. The large chart has a clear path. The large chart has odds favorable momentum. And the small chart starts to push the opposite direction with a reversal bar. At the time of that reversal bar, I want you to focus your attention on your large and synthetic. The tighter they are on top of one another, the smaller your window is going to be. This is not your window of opportunity. This is not where the market is most likely to continue. We're going to refine it even further. You guys are going to take those trigger lines. I lost my mouse. Give me just 1 second. I totally just lost my mouse. Let's see, come back. There it is, got it. I think that was a little snag it. From the top of the triggers to the bottom of the triggers, we're going to refine it. And we're going to go from the highest point of support, that mid band inside of favorable large triggers, to the lowest point of support, those yellow one-to-ones inside of favorable large triggers. And this becomes the point, the window of opportunity, where the market is most likely to bounce. And guys, this is where the magic happens. This is where you have the ability to know exactly where it's likely to happen. And you're going to activate a limit order right at the top of that window. Why? Because you have odds favorable momentum, because you have a clear path, because there is absolutely nothing in the way to create a bounce on that large chart. So the top of the window makes sense. We're not going to trip over a couple pennies. And this is part of trading, guys. You get in at the top because you don't want to miss it. It may go all the way to the bottom, but you're still in the window. The rules are still met. The advantages are still in place. You've created a window, like this area where the market is most likely to continue. The more spread apart these triggers are, the bigger that window becomes, the more risk you're going to have because your protective stop is going to go where the market shouldn't go. It's going to go outside of that window of opportunity, 4 or 5 ticks below that lowest point of support. Because if the market crashes through your window, if that small crowd has it in them to get beyond it, you don't want to be in that trade, guys. Your advantage is gone. You're no longer where the market is most likely to continue. And you will take a small loss. This is a part of trading, guys. Anything that wins 70 to 80% of the time, it means that for every 10 trades I take, guys, I'm going to lose 3. I'm going to lose 2 or 3. Every 10 trades I take, I'm going to lose 2 or 3. I don't get to pick which 2 or 3. It might be the first 3, and it sucks when it's the first 3. I've been there. I've done that. The first 3 may end your day. But With this look, with this entry, with these odds and all of these advantages, typically 70 to 80% of the time, this is my result. I'm going off to that profit target. All that momentum is carrying me in the direction of the trade. That clear path isn't hindering that forward progress, and I'm taking profits at that next key area. Um, and guys, I want you to focus on this entry for 20 days. I want you to focus on getting into the market at the best of the best spot. Great entries create manageable trades. And once it starts to move in the direction of your trade, guys, you can reduce risk even further below that reversal bar. And this is what we focus on for 20 days, guys. This is your best of the best. This is what we're looking for. And where did it go? All right. So to enter, so Lyle, how to put a limit order in? Obviously, I don't have any rules met, right? If I right click, if I right click above the current price, my first option is sell limit two. And if I click on sell limit two, this is a limit order. It means if price comes up and reaches 73.17, I'll be in a short position. I'll be in a position where my expectation is that the market goes down. The flip side is if I right click below the most current price, it's going to give me buy limit two. What buy limit two means is that if price comes down and reaches this order, I'm going to be in a long position. I will have bought the market. My expectation is that the market goes up. Um, and that's your limit order. And what you'll be able to do is you'll be able to place that limit order right in an area inside of favorable large triggers. So here where it was odds favorable, everything down, this is the S&P, guys. Hopefully somebody caught this one. When this reversal bar printed, I put a limit order just below that lowest point of resistance. I got into that market. My stop kept me safe, and that momentum pushed me down. Pretty cool, right? So hopefully that helps. Gary, great job today. No problem, Lyle. Right click above the current price. It'll let you sell limit two. Right click below price. Buy limit two. And you're going to place that limit order just above or below the area inside of favorable large triggers. Just above for longs, just below for shorts. So again, with everything down, almost broken through, smalls, large, momentum coming from a termination condition. Everything's coming down and a reversal bar prints. At the time of the reversal bar, from the top of my triggers to the bottom of my triggers, does everybody see it? My lowest point is this resistance. My highest point is these yellow one-to-ones. I right click and I activate sell limit two. And if the market comes up, whoops, I messed that one up. If the market comes up, if it comes back to me, I'm in a short position. I'm in a short position with all these advantages. And once I get a reversal bar, I reduce my risk. And then I take it all the way to Profitsville. And that's what we just learned, guys, is being able to get in at that spot, being able to take the best of the best, being able to recognize three little advantages that are the recipe for a trade. In order to help you with that, I'm going to give you the trend trade checklist. This is a checklist that I've never had anybody do worse than 70% by following to the letter. I've never had anybody be able to check yes truthfully to each and every one of these and not do better than 70%. And remember, the goal is to get paid, right? So is the market coming from a good top or bottom? Was there a termination condition that created the reversal? If there was, it increases the likelihood of success. If there wasn't, you'll have to use those three divergences to potentially manage out of. So Adriana, thank you for posting that. Do you remember when we were talking earlier? And this is a perfect example of it. When the small triggers break through the area, but the large triggers do not. This is what we call a 50-50 look. That's the first part of the lesson. This is a 50-50. It means that with this much momentum, the area has the potential to break. Does that make sense? So this area is not broken yet. My Snagit is really slow right now. Hopefully I get my cursor back in just a second. So right now the area is not broken. The area is, come on, Snagit. Um, there we go. Nope. Snagit's got a Snagit this morning, guys. I almost used my finger to point. How silly is that? Here we go. Oh, maybe it is my mouse. Maybe I need a battery. I'll change my battery at break. So let me use this. Smalls are through, large or not. This area has the potential to break, but it's not broken yet, right? So what does that mean? That means that on this particular trade, Adriana, I have momentum, but I don't have a clear path. I've given up one part of the equation. And when I give up one part of the equation, it's important to me that I don't give up the other two. So the large chart says termination creates a full reversal, gives me odds favorable, everything's going and it has the potential to break. So I come to my entry chart and I insist on a couple different things. I insist on, I'm trying to reset my mouse here. There we go. I insist on not giving up the advantage of momentum again. So what I'm looking for is I'm trying to make sure that I don't have divergence, that there's no visual loss of momentum over here, because that's my first advantage. I have momentum here. I'm not going to give it up here. The second thing that I want to make sure of is that since this only has the potential to break, that I've got a very concise window of opportunity. I've got a very small point where it's most likely to continue. And what I've done there is I've knowingly given up. I have knowingly given up my clear path, but because of the momentum, because of the tiny little entry area, and really most importantly, because it came from a termination that created that full reversal, I'm going to take this trade and I'm just going to manage it aggressively. If something changes, I'll get out of it. And Adriana, this is the second trade that we talk about. And the way this one's set up is 100% by the rules for this KISS plan that I'm going to give you in just a second. Um, so if you didn't take it now, you may take this one in the future because this is the perfect medium probability trend trade. This is the best of the best way to take it. And this is what you're going to be able to take pretty soon once that chart reading comes together and you're able to process just a little bit faster. Does that make sense? Does the explanation make sense? And what I'll do is when I present that 50-50 from the KISS plan is we will cut and paste. And let me see, I think I have it right here. Everything is rules. Everything is rules, guys. Open up, please. There we go. So on this particular trade, these are the rules for it. These are the rules that I'm about to give you. Do I have odds favorable momentum? Absolutely. Do I have smalls outside of large? We're looking good. No divergence from a good top or bottom. The plan says take the trade. Um, and guys, I'm going to replace the battery on my mouse because this is absolutely killing me right now. I'm going to close that one down. And that's the second trade, Adriana. So, and that's okay, Joel. If you weren't there, then it wasn't your money. Guys, this is the first hour. The first hour is the same hour every day. The first hour is very much um, rules. It's talking about advantages. It's giving yourself the best of the best, focusing on what's going on. I'm going to take a quick break. When I come back, we're going to give you the or the checklist. I'm going to give you, damn it. I'm going to give you the checklist, the plan to take it, and we're going to get into looking at um, your charts, and we're going to talk about advantages on your chart. And I'm going to remind you, please, 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 every time you post a chart, Tell me why you did what you did. Tell me what your rules were. Tell me what your thought process was. Tell me what you were thinking, what you were looking for, what you were looking at, what you were hoping to have happen. And what we'll do is we'll take it as an opportunity to look for advantages, to celebrate victories, and maybe be able to use a refinement process just a little bit to get you um, where you want to be. So my mouse is completely dead, so I'm going to close this one out. And I'm pulling up NinjaTrader 7 so that we can draw on charts a whole lot. That'll be up in just a second, guys. I'm going to be back in 5 minutes. When I come back, we'll start looking at your charts. We'll start talking about advantages. We'll start talking about the things that are going on that are providing advantages. Whoops, I'm not sure what I just did there. And of course, I have to ask Miss Adriana, did that answer your question? Did that help you out a little bit on that? I hope it did. Cool. That's always the goal. The goal is always that we can get you guys a little clarity. So thank you so much for asking the question. Thank you so much for putting that out there. I know that's not always easy to do because it means that we have to admit that we don't have all the answers, and I hate not having all the answers. Guys, I'll be back in 5. Here's your crude oil chart loading up, and I'll see you guys in just a minute. so you don't have to go back. Are you still here? And guys, always do this. Always let me know if if you want to get your charts. If you want to get your charts ready because you have to split. I'll always do it. So CJ, let's start with this one. You have one of those pivot stop outs. It is a termination condition. It's not a great one, but it's pretty good. You do have odds favorable momentum. You notice how none of the triggers have gotten through the area yet? And I love the way you did this. It's not quite a 50-50. You are actually trading directly into support because the triggers have not broken. That's the recipe. The small and the large have remained above. You take a quick little momentum style trade. Large triggers are a little higher. And it comes right back to support, right? And then it creates that bounce where it pushes back to the areas right inside of those large triggers. It's a great read. It's great momentum. The momentum leads the way, guys. And we're going to say this a lot today. You're going to notice that momentum can hide little errors, right? So trading into support normally is a horrible thing, but CJ knows that with this much momentum and no divergence and strong triggers, it's more likely to go down than up. And he takes quick little profits right into the trouble area. And I think you did great, man. I think that you took that one exactly like you should take it, and you managed it aggressively because you didn't have every advantage that you were looking for. So solid. It's okay to take small profits every now and then, guys. It's okay to not hit home runs when things aren't perfect. And then CJ, did you have another one? Did I see you post another one somewhere? Or was that it for you? That was just it? Okay, cool. So momentum wins, right? That's exactly what that is momentum wins, which is amazing. Oh, I like the way you have the charts. I like the colors. Cool. Well, go enjoy and feel free to watch the video later too, because hopefully I say something smart today before it's all over. Enjoy your afternoon, brother. Or sister, I don't know. CJ could be either, right? All right, guys, so we're going to scroll up to the top and we're going to look at what you guys have been doing today. We're going to talk about it in terms of advantages. We're going to look at it. We're going to kind of roll through it and see what's going on, see what you guys see and what you're thinking and what you're doing, and see if there's any way we can do it just a little bit better. Joel got us going, the man who never sleeps. And Joel says, I have odds favorable momentum coming from a termination that creates a full reversal. Awesome advantages, right? Whoops. I'm just going to bring up three of them so I can scroll down and see the chat. Um, we'll go through all three of them here. So, odds favorable coming from a termination. And Joel, this is one of those situations where it's not a clear path because your large triggers are still below. And that's okay. But what you're looking at here is when a termination creates a full reversal, when a no triggers through termination creates a full reversal, that's when these 50-50s tend to break. They're more inclined to break. And the fact that you hadn't reached the next area, you had no divergence, strong triggers, beautiful entry, and perfect profits. I love this 50-50 trade, and I think it's great. This fits the bill on every requirement for the 50-50. Strong bottom, great triggers, no divergence, tiny window, giddy up to the upside. Solid, Joel. Great trading. And I love that. Rules met felt good. It always does. And then that's the same trade. Nice job. And then here, good lesson here. And we're going to talk about a couple different things. The first thing is you had the potential for odds favorable, right? And when it came back up, it flattened the triggers. So Joel, it came down and the gap theory sucked it back up. And when your large triggers are a full bar away, it's likely to close the gap. So that was kind of a tough look. And then over here, do you notice how you just have flat triggers? They're not favorable. One of the key phrases in favorable large triggers is wide, angled in the direction of the trend. Really, really like focused in that direction. And here they're kind of flat and they're kind of lifeless. And these are momentum indicators. And if wide means strong, well then flat means not so strong. So what happens is you get caught in that little vacuum and you really don't have anything to support this trade. They're weaker triggers. There's no areas inside of them. They're split away from one another. Um, and it's just not the best look. I think you nailed it. Um, and it certainly had the potential to go down. But you notice how this isn't a good top, right? They never made it to where they were going. They never made it to where they wanted to be. They had pushed up all day long and they couldn't quite get 72.80, and the seller said, let's test the waters. The triggers didn't follow. For me, that's a big, let me hold on. Let me see what's going to go on. Let's see if they're going to look for that next area. Nice job, Joel. Thank you for posting. And guys, remember, if somebody posts, it doesn't have to be your chart. Ask a question. It is community property. Let me see where I'm at. That was Joel coming down. And then Cav got us, and I know he's not here. He'll be back at 10:30. We're going to talk about this one again. But another 50-50 trade, right? Another opportunity um, for the potential for areas to break. And then there's divergence. On the KISS plan, divergence says don't do it. Divergence says, man, it's just not worth it. But coming from a strong bottom, he gave it the best chance. It just didn't work. He takes a small loss. I don't disagree with the trade at all. I think he took it as well as it could be taken. But we just talked about it. It's not perfect, right? So as you grow with the software, you're going to understand when it might make sense to break your rules just a little bit. It happens sometimes, Lyle. So this is what we call a strong trending market. The market reverses and pushes. And you notice how they're riding the line? Let me make it bigger. Do you notice how they're riding the line all the way down? They're not inside, they're not outside. They're literally just creating that base on it. This is a strong trending market. When you get 30 bars in the same direction, when you get multiple areas broken, until it completely gets to the other side, that's it. So as you grow a little bit, what you're going to find, Lyle, is in a strong trending market, there are people who will sell the midband until it just stops working. They will sell every midband on the way down here until it stops working, right? They'll sell here, and they'll try to sell here, and they'll try to sell here, and then they'll try to sell here, and this will be the one that doesn't work. And that comes with experience a little bit. But notice down here, those weak triggers coincided with support and all that good stuff. So great observation, man. And that's a little bit about a strong trending market. And then here's Ron. Ron says with odds favorable and a clear path, he likes to get paid. And he doesn't hold for home runs. He just goes for little snippets. And then it goes the other way. Strong triggers, clear path. He gets paid. Nice job, Ron. Oops. And then Cav is next. And again, he's not here, but we can still use it, right? So Cav, this is actually down here. This is odds favorable momentum. The path is clear. There's his tail right there. It's a little hard to tell because of the separation. Cav lets it break the area, pulls right back to it, gets out at trouble, and then holds for trouble one more time. And the whole time, guys, these fluctuations right around key areas, the large chart said it was going to make it. The large chart said it was probably going to make it the whole time. Large chart leads the way. It's a good look at a trade. And then Joel, odds favorable, clear path, nice entry. And then Joel, this is NASDAQ, yes? Did you see the picture that I posted right after? I didn't even know that you had posted a NASDAQ trade. Guys, this is one of those. Adriana, absolutely. Oh, you know what? I skipped that, didn't I? We'll do that right after this. Um, Guys, this is one of the NASDAQ lessons. This is the one where I blew out 10 accounts learning these just for you guys. Small triggers on the NASDAQ on your entry chart, don't fight them. If you're fighting them, they're likely to push down. And these small, strong triggers, guys, they will kill a trade. They will absolutely annihilate a trade. So, Joel, I agree 100%. Everything looked good, but that little nuance on the NASDAQ, that little just be patience on the small triggers would have paid huge dividends here. It would have kept you out of this trade. And it's hard to go through that excitement sometimes and just be a little patient. But that's a huge one on the NASDAQ. So, Adriana, this is it, right? Here's your checklist. This is not only what you're looking for to get into the market, this is what you should be writing on your chart every time you take a trade, because what you're doing is you're associating the looks with the words, and it makes it easier to repeat. Here's the same checklist I'm going to give you guys, and I apologize. By not doing this before my break, I kind of busted up my groove a little bit. I blame the mouse batteries. Here's the exact same checklist, but it has pictures of what we're looking for, guys. Is it a termination that created a full reversal? Is the market coming from a good top or bottom? I want you to remember the recipe for that is a no triggers through termination that reverses the market. That's a good top or bottom. Odds favorable momentum is a separation between the small and large. We've got it visual. And then this one also shows you exactly what you want to avoid. Those anything can happen triggers, those weak triggers that can create a deeper retracement or a bounce. The idea behind termination conditions, no triggers, no trade, both triggers, it's clear. And then there's that 50-50 that we've seen a couple times today, right? Not a high probability scenario. This is that medium probability. There's a problem that exists. And then defining where the market is most likely to continue, guys. I've got it both for longs and shorts here. And it talks through the whole thing. The reversal bar starts the pullback. The limit order goes below the area inside of favorable large triggers. And these areas on the wrong side, these aren't a part of your window, right? So all of that's there right there. Um, I don't know if I have a checklist for the NASDAQ, Joel. Take your high probability trend trade checklist and put don't fight small triggers. How do you like that? Oh, you know what? There's John Novak's NASDAQ trading plan checklist. I don't know if it's a good one or not, but it says John Novak on it, so he gave that to me at some point. Maybe that'll be helpful. Um, I always think there's an easier way. So guys, this next checklist, the high probability or the high probability trend trade checklist, I'm giving you one with pictures of what it means. I'm giving you one with just the checklist. Print the checklist out and put it on your desktop. Police yourself a little bit. Joel, our brains are so different. He has forgotten more about trading than I'll probably learn in the next 10 years. It's when I talk to my brother about trading, the first 30 minutes is like talking to Einstein about string theory. He's just brilliant, and I didn't realize that he was. And this is why I teach the class, because I try to keep it a little more simple and remove assumptions. So, Adriana, there's your checklists. And then, guys, this is what I didn't do and what I want to do is I didn't give you this yet. This is the KISS plan. This is the keep it simple, silly plan. This is the keeping you focused on the best of the best in the beginning, giving you an optimized chance of success with the high probability trend trade, optimizing your chances of success with the 50-50 trade. Guys, we've seen 50-50 losers a couple times today. And the ones that are losing, for the most part, don't follow this super simple plan designed to optimize your chance. The idea is that you focus on entries first, guys. Give yourself enough time to learn how to get in at the right spot. Thanks, E. Webster. I'll tell you what, though, but once you have a foundation, God, go get in his class. Because he'll take your foundation and he will blow your freaking mind. It's, I was floored. Once you understand the basics, he's easy to follow. If you don't understand the basics, he can be a little difficult. That's why I'm in this classroom with you guys. Your simple plan for consistency, guys, is never fight the large chart direction, never fight the triggers. Let it be easy. Go with the flow. Don't be a hero, however you want to put it. Um, define your entry. Get your entry, your best entry. Take a lot um, of pictures of entries. Make sure you can get it at the right spot. They create manageable trades. You quit at 15.20, switch to sim, you're down 840. Take the money is a good strategy. We're in it to get paid, right, guys? We're always in it to get paid. Um, my exit strategy says if I hit my goal for the day, I'll trade until I don't lose. And if I lose, it's done. It's day over. That's it. I'll go do something else. Everybody's going to have a different one, but you have to define it. When are you going to stop? Because most of us don't stop. We believe we can get it back, and that's when emotion comes in. But let's go back to the KISS plan, guys. Focus on your entries. Your entries should be pragmatic, and they should be mechanical, and your entries should be 100% determined by the rules being met on the large chart, right? And if the large chart says go, if the large chart says strength and clear path, you're going to go through the whole scenario of entering on the small chart. So large chart says down, large chart says clear path, and you guys take an entry right at an area of resistance inside of favorable large triggers. This is actually the first step in your management plan, guys, is getting it right on the entry because great entries create manageable plans. You have defined where the market is likely to continue, which means that you understand where the market shouldn't go. And that's where your stop goes, guys, 4 or 5 ticks beyond that window of opportunity. Your ATM strategy is set at 12 ticks for crude oil. It's set at 12 ticks for the S&P. That is not your stop. I can't stress that enough. Your stop is where the market shouldn't go. And sometimes it'll be 14 or 15 ticks. Sometimes it'll be 6 or 7 ticks, depending on the size of your window of opportunity. That's a pretty big window. Um, and at this point in the trade, there's nothing for you to do anymore. You've activated, you're in, you've got all the advantages, and you're either going to get stopped out, which happens, you've managed your risk through great stop placement, or the market's going to give you a reversal bar in the direction of your trade. Um, and this gives you the opportunity to move your stop a couple ticks above that reversal bar. It's going with the direction, with the momentum, with the clear path. It's doing everything you want it to do. Let's reduce risk. And then once again, there's nothing to do. It's either going to come back up and hit you, and it will happen, or it's going to continue on to your first target, guys. And if it continues on to your first target's $100. It is a very small amount of money. It is a quick profit. It is designed to make you feel great about the world, to get you excited about what you've just accomplished. And when you win $100 real quick, what happens is you start to not stress because things just got better. And you're going to move your stop to break even, which is going to make it even easier for you to sit on your hands and do nothing. And remember that the large chart leads the way and see if it hits the second contract or the second target. And if it does, it's only $200 in the distance, guys, which means on one trade, 2 contracts, the absolute best of the best, most pragmatic approach to trading you can take, 70 to 80% of the time, you're going to find that it's either going to be $100 and break even or um, a $300 winner. And I say $100 or break even because as you grow with the software, you're probably not going to use that break even stop so much because it doesn't make sense. It's right at an area of resistance inside of favorable large triggers, and that's right where the market should continue. But the idea is that keeping it mechanical creates a huge advantage, guys. Keeping your entries mechanical creates a huge advantage. The management is right here in the spreadsheet. The entry sequence is right here in the spreadsheet, guys. Keep it focused. Keep it very easy in the beginning. And this trade plan starts with the high probability. It goes to the management on it. And then it talks about that 50-50, right? It takes that, and C-Dub, you can almost never go broke like that. Um, I'm telling you, $100 a day, 3 times, is $72,000 a year. The next one is the 50-50, guys. The dreaded 50-50. The one area not broken yet, but has the potential to break. And I'm not going to go over all of it, but I just want you to see something. You don't give up momentum, right? If I don't have a clear path, I don't give up momentum. I make sure that I have strong triggers. I also make sure that I don't have divergence. This is one of the biggest killers of 50-50s. Um, and this is one of the most ignored parts of the KISS plan is people say, yeah, but. I'm telling you right now, when I take a 50-50 with divergence, I know that my likelihood of success goes down dramatically. Um, from a good top or bottom is key because it means that they made a decision, right? It means that they made a decision at a key area. And because they did, Joel had a beautiful example of it. Because they made a decision at a key area, because the momentum was the absolute strongest. Notice that the areas aren't broken. Because there's strong triggers and no divergence, this 50-50 was more apt to work from the good bottom. Um, so when you talk about the 50-50, guys, remember that you're sacrificing a clear path. Don't be afraid to just skip the trade if it's not perfect. And the perfect entry for me, I put pictures for both of them in there, guys. For the short trade, no divergence, strong triggers, tiny window, right? Whoops, small amount of risk. I'm not risking $800 on a trade where I don't even know if this area is going to break. It doesn't make sense to me. It's poor financial planning, I think. So the KISS plan is there for you guys too. The KISS plan is designed to optimize your chances of success, to keep you on the right side of things. And for you guys that are brand new, I've had people in their first 30 days with Nexgen use the KISS plan exclusively and fund prop firm accounts and reach their trading goals and take it to the next level and start adding contracts and all these things through simplicity. And what you will find is the more you chase and the more you try to be a hero or some sort of trading badass, the less likely you are to catch the trades. The more you give yourself to think about, the harder it becomes. So um, keep that in mind. Do whatever you want. I'm not the boss of you, but something to think about, right? There's that NASDAQ caught in between areas. How's that for rule number 2, keeping you out of trouble? Resistance to or support to resistance to support to resistance to support to resistance. You guys see that? You have a clearly defined range that it wouldn't hurt to break out of before you try to predict. Triggers don't match, terminations are present. Is it going to be the top or the bottom? Is it going to be the long or the short? I don't know. Well, now I know. Now it sure looks like odds favorable to the upside, doesn't it? Pretty cool, right? That's what it looks like when they break out of a range, but we're still 50-50. Is it the old fake out breakout? Is it the sellers letting them get just far enough? Or are they really going to clear the area? Pretty cool. I love fibs, guys. Fibs are amazing. And I think that's everything we got there. So let's get back to pictures. Let's get back to looking at what you guys are doing. Remember, if you have questions, ask questions. If you have comments, please make your comments. If you think I am just absolutely full of shit, tell me. But then take the time to prove me wrong. Go back and do the historical, study it, prove me wrong. All right, Cav, termination, right? Not a completely no triggers through, but that's a pretty good look. Um, Large tried to eke through, all that good stuff, but you had 3 divergences. And what you're taking here is the 50-50, right? You're taking that 50-50 trade. Um, we'll take a picture of it. And welcome back, Cav. I can't believe it's already 10:30. So if we're annotating this chart, it's 50-50, right? And it's strong triggers. And it's even from a good termination. Everything's pretty on this chart. It really is. But I've still got 2 areas not broken. And that's okay. It is what it is, right? So I come over to my small chart and I've got strong triggers and I absolutely love that. I do have divergence and I certainly don't care for that. But because of the strong bottom, I'm willing to give it a shot. And I make my window of opportunity from the highest point of support to the lowest point of support. And I think that when I annotated this earlier, no, it definitely wasn't, Cav. It was very much 50-50. Maybe it was only one area when you entered on the pullback, not two. Um, but your window of opportunity was about 12 points wide, right? So that was about $240 worth of risk on this trade, um, which, with a good bottom and all that, it's not a bad thing. This is good, right? I like that look. This is a negative. So I'm losing a little momentum and I don't have a clear path. And then my window is huge, right, Cav? And I want you to think about it. If divergence is a loss of momentum, if a divergence is a slowdown to the push up, it's more likely to go deeper in the pocket. Does that make sense? When that divergence prints, it has a better chance of pushing lower. And you did have strong triggers, but just I'm losing momentum. It might go lower in the window, and the window's huge. And this is where I go back to my idea on the NASDAQ. If you know that that divergence and not a clear path can push lower, it activates that slowdown, that, hey, let me be a little patient. Let me make sure that it's perfect. And what you'll find is when you did get to the lower area, maybe you wait for a reversal bar, maybe you wait for a close on the correct side of the triggers, but even when you get the reversal bar, it's that damn strong triggers against you. It's that NASDAQ trade killer, those strong triggers against you. So what you do, and very often, E. Webster, with the loss of momentum, so when a divergence is showing with the negative numbers, don't trade into it even when there's only one divergence. Cav, let's turn that around because I can't blanket statement that. If I have, let me back up real quick. And let me just see, and I'll take some stuff off of it. So let's say hypothetically, I have odds favorable momentum, right? And I have a clear path, Cav. And that's the key to what I'm about to say. And I have a clear path. So let's say this is my look right here. Odds favorable, nothing in the way, everything is beautiful. In this particular situation, when life is grand and everything is amazing and there's nothing wrong in the world, I couldn't care less about one divergence because I have a clear path and I have momentum and I have a window of opportunity. Does that make sense? It's a perfect world. It's a perfect world. And then the flip side, and we'll go back to your picture, is when I have odds favorable momentum, but I don't have a clear path. Rule number 2 isn't met. Well, then that loss of momentum kind of cooks my goose a little bit, especially on the NASDAQ. Really, any trade though. And that's one of the reasons, Nas, and or Cav, that's the biggest reason in the trading plan, in the KISS plan, and the super simple approach to it is it says no divergence on the 5-1, and then it reminds you no divergence on the 5-1, and then it reminds you one more time that if divergence prints, get the hell out of the trade. So this is an awful lot of study that's gone into this plan. And basically what it says is it kind of sucks when you get divergence here. So I'm not telling you how to trade and I'm not telling you what to do, but let's say that I'm writing out a trading plan. I may put on my plan, and I'm just going to use the big call out button here. If I have a 50-50 and divergence prints on my small chart, one divergence, and it is coming from a good top or bottom. And this is key for me. If I'm going to use a divergence, if I'm going to take it with a divergence, it better be coming from a good top or bottom. On the NASDAQ, and I bet this is where you're losing 90% of them, I will wait for a close on the correct side of the small to confirm the trade. I'm not saying that that's a rule that you should implement, but Cav, I'm telling you right now, when the divergence prints, it's likely to push lower. When it's likely to push lower, you're almost always fighting these trigger lines. And the picture that I took after it, everything set up, the path was clear. Divergence says it's likely to push lower. One divergence with a clear path was absolutely no problem if you got in right here. Two divergences, by the time it got back to the area, look at the small triggers. And by the time you get down here, the trade's over. Cav, that was the mistake that I made all the time. That was the mistake that blew out 10 Apex accounts. That was the mistake that sparked the addition of this on the spreadsheet. So congratulations, you're right there with the rest of us, man. But I really think on the NASDAQ, focus on those small triggers a little bit. And the entry thoughts are, when the rules are met on the large chart, when I get to the area, where's the location of my small triggers? If they're below the reversal bar marker, I'm going to sit on my hands. If they're above the reversal bar marker, I'm going to go with the area. Don't fight small triggers. That's it. Great picture, Cav. I hope that was helpful, man. Learning to trade the NASDAQ, guys, it's a different animal because it looks the same on the large chart. But the small chart's it's got some nuances there that need you to think about other things. And if you're not quick and comfortable with your chart reading, it will absolutely eat your lunch. It will chew you up and spit you out. Allegedly. All right, let's see who is next. And then Cav, this was you. And your trade down here where you took it was odds favorable and a clear path. So one divergence didn't freak you out, right? Two divergences didn't freak you out. Three divergences without odds favorable and a clear path told you that it's time to jump ship. This is the best exit ever, no matter what happens next. I agree with your exit 100%. It was pragmatic. It was logical. And look at this entry. Large chart set up, right? But you can't ignore the small chart. Your large chart never hesitated. It just got to the key area. But here's that recipe too. If you didn't take this trade, this is your NASDAQ lesson. When the large chart says go, look at where your small triggers are when you reach the area. See how they're a full bar away, Cav? It gives you time to manage that trade as it sucks it right back to those small triggers. Your risk is virtually nothing. This is when I go at the area. When it starts getting uglier, I start waiting for the confirmation because it rides those small triggers all the way down to the area and then it closes on the right side. And you'll see that a lot. So if you didn't catch this one, I love your entry, by the way. That was a great second chance with the look on the large chart because the small triggers were still a full bar away. That's that little NASDAQ nuance. Great job, dude. I'm going to tell you right now, if you can't read your charts in a matter of seconds and know whether or not your rules are met, NASDAQ is not your spot yet. And guys, I kind of jumped around, so if I missed you, let me know. Tony the Tiger. Let's see. Everything on your large chart, 50-50 from a good bottom. And you wait for the confirmation. You wait for the close on the correct side of the triggers. And it's easy money all the way up to the area. Tony, nice trade, bud. Large chart leads the way. JW, I'm not sure. We'll look. Large chart leads the way, 50-50 from a good bottom. Take care, Lyle. Small triggers Could have gotten it at the area. They're a full bar away, but you wait for the confirmation and it makes life easy for you. Nice job. JW, let me scroll through and just make sure that I didn't skip anybody. Nope, you're actually next, JW. Always tell me if you think I missed your chart. So JW, we have weak triggers, right? See how they've gotten a little weaker? Beautiful entry, perfect stop. They just came for you. Which one, Collie? This entry, did market flow help with it? Not yet, Steve. I have trouble reading his market flow. Is this the one that you're asking about? Over here? I'm not sure which one you're talking about. And I apologize. One of the biggest things for market flow, Collie, is that your rules are met. That your rules are met. And I don't know, was there a picture of the market flow? Did I miss it? I may have to go back and look. This is the only one I think I've seen with a market flow on it so far. And this was Tony's 50-50 with the pullback. And market flow gave confirmation right here. Oh, then I don't know if market flow would have helped. I don't know what market flow looked like at the time. So without actually seeing the market flow chart, I have absolutely no idea if it would have been helpful or hindered. Was it the NASDAQ trade that we were talking about? Right. Hold on. Was it, let's get there real quick. Was it this one right here, this NASDAQ chart? Is that the one, Collie? Cool. So let me tell you a true story. Market flow will never save you from strong triggers that I know of. Um, Market flow on the NASDAQ, that is jumping in front of a freight train. And no matter what market flow tells you, fighting those small triggers is rarely advantageous. Being on the correct side of these small triggers, not fighting them, is one of the biggest advantages on NASDAQ you can give yourself. I knew we'd get there eventually. So I really don't know. I don't even have a market flow chart for it, but against those small triggers, even if it gave you a signal, your advantages aren't there on the small chart, so it doesn't make any sense to fight your rules not being met just because market flow, right? Um, it may have, and maybe I'm not being 100% clear, is no matter what market flow said, no matter what market flow indication was, no matter what the volume was, no matter what anything on market flow was, this look on the trigger said no. So with this look on the triggers, Collie, I'm not even looking at market flow. I'm not even consulting a third chart because my entry chart says don't take the trade. Does that make sense? So before he ever even had to look, this said don't take the entry. I hope that makes sense. Market flow is awesome, but market flow is a confirmation chart. It's not a make it so you can break the rules chart. And that's what I did when I first got market flow is I very much turned it into how do I break my rules when they're not met on the other charts? And it cost me a lot of money. It cost me a lot of money. So one of the cool things about market flow, and thank you for asking the question because I think this is great. And this is the picture that I always go to for you guys that are starting to incorporate market flow is the trend trade rules have to be true. The tops or bottoms have to be true. The rules on your other two charts really need to tell you that it's time to look for a trade. And then, Kali, a great time to use it for confirmation, and we're going to use our imagination just a little bit here, is let's say hypothetically, the rules are met on the large chart, and you're just trying to be a little patient, and you know that you're going to wait for a close on the correct side. Well, market flow can confirm the momentum on the large chart, letting you know that it's likely to go up, or it can deny the momentum and say, hey, even this one says down more. And then when it gets to that lower area and you get the close on the correct side, maybe you use market flow for a little piece of confirmation. David B., same thing for you. When I got market flow, I completely forgot all of my rules on the large chart. And I let myself take every market flow entry that I saw, and it was hilarious, and it was actually a little sad. Um, but I think I may have an S&P market flow chart. No, I sure don't. Um, so it's imperative if you're going to have that extra chart, if you're going to have that volume chart, make sure that the rules are met on the large chart. Make sure that you still have those advantages in place, rather than hoping that market flow gives you something that doesn't exist. Kali, that was probably such a great question, and I appreciate it. Um, and it was a great example of how we want the rules to be met on the two charts before we start looking for a third chart. Because what I did, and I don't know if you guys are the same way I am, is if my large chart said don't take the trade, but my market flow chart said did, I took the trade because it meant that I got to get into a trade. And that was exciting for me, and I didn't want to miss a potential move. So I do all the time, Joel, and that's why I think less is more. Here's Ron again, who absolutely loves a clear path and makes money all the way up. And then when he reaches Fibonacci support and the large triggers are a full bar away, gap theory, Ron takes an opportunity right up to the triggers. Ron, that is some beautiful, beautiful trading. And guys, this is where you're headed. If you're not there yet, if you're looking at Ron's chart and you're saying, man, that's not a high probability trend trade, that's not a rules-based long, everything's red. Well, Ron is ahead of you. Ron's a year ahead of you. And he spent a year reading his indicators, and he spent a year learning how to take advantage of the patterns that he sees. Termination condition, triggers roll. Who was this? Oh, I'm so sorry. I clicked on it and I forgot to look to see who it was. GWC? Great picture, GWC. Gonna do something here though. So GWC, are you in here, bud? And this is for everybody. It always is. You said termination and the triggers rolled, right? So you're saying, man, this is awesome. This is a strong bottom by definition. This is a strong top by definition that was absolutely amazing right until it reached the termination. And guys, this is a key part. Sometimes the market gets stuck. Termination creates a full reversal, strong top. Termination creates a full reversal, strong bottom. Just because it's a strong top, I can't break the termination condition rules. And then from here, GWC, it goes up, but it goes right back into a termination. No triggers through resistance. Do you see it? So you talked about the termination condition that the triggers rolled, but you didn't talk about odds favorable momentum in your annotation. You also didn't talk about whether or not you had a clear path. And I think that if you spoke to yourself in those terms before you took this trade, it wouldn't have been so appealing. And you also didn't have an area inside of favorable large triggers. You had a mid-band dying below flat triggers. Does that make sense, everybody? Why am I such a jerk about annotations? Why am I such a broken record about annotations? Because if you begin analyzing your charts and you start talking about advantages, and let's do it together. I had a termination that created a full reversal. I've got the small working their way outside of the large. I've reached resistance and not one trigger is broken through. This isn't my trade. And that's how it works. I have smalls outside of the large. I haven't reached this area of resistance yet. I'm close, but I'm not there. I'm willing to take a two divergence pushback to a midband and see if we get to that area. If every time you open your charts, if every time you look at it, you talk in terms of advantages, I have odds favorable momentum. I don't have a clear path because the large haven't broken. I have divergence on my smaller, faster chart, which means this may not work as well. It could, but that's how quickly your analysis has to happen. This is coming from a termination. It couldn't even reverse because it never even blinked up. Odds favorable coming from a term, one divergence, small's a full trigger away, Cav. That's your at the area scenario if you're going to try one shot. And now all of my areas are on the wrong side of small triggers. Do you see that? All of my areas are on the wrong side of favorable large triggers. Maybe I wait for some confirmation if I feel like I want to take this trade. Maybe I get to the correct side of those small triggers because here they are behaving as support. I love it. This is how fast your analysis is going to get, guys. There's your first close on the correct side. Your risk is already established. The momentum is good. The path is clear. You know what you're risking. You know where you got in. And if a third divergence prints, it's a deal breaker. And if the third divergence doesn't print, we'll see if it goes down to 44.75 with all that momentum. And sure enough, right to the first trouble spot. Guys, we're talking through it live as it happens. No reason to move a stop yet. Maybe you took $100 in your break even, and it might have gotten you. But there it goes, right to the next fib. Isn't that freaking amazing? And it kept you from fighting the small triggers, and there was still plenty of room to make money, and the large chart led the way. Cab, does that make sense? Who are my NASDAQ traders? Smalls are a full bar away, get in at the area. Plenty of time to make money and manage. Smalls less than a full bar away, get in on the, give a little bit up. All that momentum and a clear path still took you down to the area, right? Large charts still led the way. Just didn't fight these bad boys. And you gave up a little bit, but you still got paid. And now we're into the termination condition. Guys, that was my best lesson on the NASDAQ ever, was not fighting the small triggers. Feel free to use it. And GWC, I don't know if you got the lesson on trading in termination conditions. I certainly hope that you did. E. Webster, your triggers are different than C Dubs. It happens sometimes. One of you may have adjusted, one of you may have not cleaned out, you may be different days back. Those happen sometimes. Odds favorable, everything down, perfect entry, make some money, manage out break even. I love it. Beautiful trade, E. Webster. Hard to go wrong with that. Had an old chart, but the fibs work. The fibs are freaking amazing. The fibs blow me away every day. They really do. Um, who was this? E. Webster, that was you. George VA, maybe Virginia. George, correct me if I'm wrong, but you had a beautiful termination condition. You waited for a divergence and a push down, and you just took an HVA trade. You used that HVA line from a perfect termination. Small triggers were on their way down. Small triggers were on their way down. Fighting a little bit over here, but coming right off the perfect area, and you were able to capitalize. Termination conditions, guys. What a great look. George Val. Nice trade, George. You've been with us a while, haven't you? Anytime I see that at the bottom, I know that you're not new. No spring chicken with us. Beautiful trade. Great chart read. And then E. Webster, we've got another one for you. Let's see what it says. Says odds favorable momentum. Not the best momentum, right? We're at the tail end of it, so it's good, not the best. I still love it. The path is clear. You take the perfect entry, which makes you comfortable with the risk that you kept on it. Profits at the 1-to-1, which is beautiful. And then when it pushed back, it got you break even. E. Webster, are you with me in here? Let's talk about this one real quick. And I like this one. I love your entry. I love your hold. I love your profit taking. And this is one of those ones where you're going to be forced into a decision, right? The smalls are against me now. It's not the best momentum. Divergence from a 1-to-1. Not holding this trade, I totally get it. I wouldn't fault you for it one bit. With every trigger above the area, sometimes, and these 1-to-1s and fibs, sometimes it's worth it to keep a little risk on there. And you did, because it just pulled back to everything green and everything up, right? And it pulled back to an area inside of favorable large triggers, and all the triggers are above, and then you get out right at the mid band, and it happens. Are you missing synthetics on purpose? Just below the last tail. I love it. Okay, perfect. Are you not using synthetic triggers on purpose? And it's okay if you're not. Some people don't want them. I like them. Oh, that's the old chart you had up by mistake. Okay. I think it's a great trade, and I think it's an awesome hang there. I think it's a beautiful staying in. Great management. Way to get a little more out of it. And then Joel, let's see what you've done, my friend. Joel says everything is down from a great top, 50-50, no divergence, tiny window. Ah, got to pull the trigger on that one and make some money. Great read, Joel. 50-50. Oh, with divergence. Damn it all. Not a great top. 50-50 with divergence. Are you guys seeing a pattern here? Not a good top, right? It's not a no triggers through termination. Does everybody see it? Guys, I'm giving you the keys to the kingdom on 50-50 trades right now. Not a good top. That's strike one. Odds favorable. It's beautiful. I love it. But now I've got divergence as well. That's strike two. 2 out of 4, 50-50, guys. That's not the best odds for success. When I have a bad top, this 50-50 is less likely to work. When you compound it with divergence, it's even more less likely to work. I hope that makes sense. And guys, I never get happy about you losing trades, but I always get ecstatic when there's a great lesson in the loss. And this is an outstanding lesson in the loss. If you don't have a good top, guys, divergence is such a bad look. And when you do have a good top, Steve B's showing me all of it, right? A 50-50 with no divergence, don't miss that trade and giddy up all the way down. And then Steve B, small triggers are more than a full bar away. As you grow with the software and your confidence, man, that's the get in at the area look. Does that make sense, Steve B? Keys to the kingdom. Yeah, I know, Collie. Every now and then. My brother's favorite phrase is we have the golden goose. Why do we keep insisting on deep frying it? That's what he calls it if we break rules. You've got the golden goose. Stop deep frying it. Just enjoy the golden eggs. So, Steve, awesome read, beautiful trade. Everything was great. And then that's the one when they're a full bar away, I'm in at the area, brother. Because even if it bounces off of those and it goes back up, I've already made money and my risk is established and life is good. So, awesome trading, Steve. Good job. 50-50s from a bad top with divergence. Oh, so bad. We already saw CJ's. He's already split. Ron, everything's down. Support is resistance. The triggers have cleared and all of it's screaming. And Ron says, man, I sure do like base hits. And if I'm not mistaken, Ron, you've at least made it to third base today. Up, there it is. What a great day. And a little high school joking. Steve B, great trading, man. Thank you for being here. Thank you for posting. All right, C-Dub. Where is your odds favorable momentum, brother? Okay, this is a bigger chart. I don't know what this chart is. Is that a 21? All right. So let's go through trickle down effect. I think you're going to like this lesson, C-Dub. I like a 21 chart. I'm not opposed to them at all. So 50-50 trade, right? With great momentum. So there's a problem on this chart. Would you agree? And if this chart you really want, I'm not sure what happened here. I'd love to see the afters, right? You got it, saw second divergence after a minute, got first profit plus 6, second still going. Um, Coming from a termination for the long, that's a win, right? 21 tells you that. Bad top termination, that sets you up for the long, which supports the 50-50 from the termination, which means that this one divergence isn't crazy bad, and you take the perfect entry. I like this trade, but do you see how this, you can incorporate that large chart, why it doesn't look that pretty from a red standpoint? That's the one, that's the termination that creates a reversal, and I believe it was echoed on the 13. So that momentum and that awesome look over here, good stuff. Oh, David B, I hope it feels better. And C-Dub, that's my favorite part about this one, is even your highest time frame is coming from a termination condition. Nice trade. Good read. That's how you use a larger chart to help. That's how you take advantage of the larger chart. So, Adriana, good bottom, strong triggers, 3 divergences, termination condition. You decide to take the long anyway. And it worked. Good job. Way to let a strong bottom and odds favorable momentum lead the way. You knew you had a problem. It got confirmed everywhere. But a perfect low risk entry gives you the opportunity to see if that momentum is going to break it because of the good bottom. And it did. And guys, it breaks rules, right? This breaks rule number 2. 100% it breaks rule number 2. But it does have a good bottom. It does have strong triggers, and it's got the perfect entry, Adriana. Beautiful entry, which gave you low risk. You could have even gone below the reversal bar. You had room to make money back to the fib. And what if things had turned here? That's not a bad spot to go break even, right? Did you recognize? I don't know because you didn't annotate your charts. Did you recognize that you were trading directly into a termination condition and choose to do it? Awesome. It's okay to tell me that. But I love it. If I'm going to trade into a termination condition, it's going to be with that level of momentum. It's going to be with that tight little entry, and it's going to be from that termination that creates a full reversal. Adriana breaking rules like an artist. Nicely done. Haha. Guys, I'll find the good in it even when it's a broken rule. Um, let's see. Did not follow rules. That's okay. So 50-50. It's not even, and Farak, are you with me in here? And here's a good lesson. I'm not worried about whether or not this is a weak bottom yet. I'm more concerned that this is a weak top. Does that make sense? Because a weak top preceding the 50-50 means that this is less likely to work. I'm not concerned about whether or not there's a bottom in yet and whether it's going to turn, because at the moment you don't know. It's not a weak bottom at all. But it was the divergence and a bad top, and I think we saw a couple people take this trade. And I'm going to ask you as well, did you give up your synthetic triggers on purpose? Did you mean to not have the synthetics? Okay, just making sure. Didn't follow the rules and it didn't work out. And I think it's important as you start with the software for that to happen because it reminds you that the rules are there to keep you safe. But when a termination gives you odds favorable momentum, and odds favorable momentum hasn't reached the next area, and you get a pullback to those one-to-ones kind of right at the triggers, just a little bit below, Farrakh says money, money all day long to the target. I love this trade. And it starts with that awesome termination condition. Rock star Farrakh. Farrakh star, that's your new name. Perfect. And then Miss Cindy, you and Adriana, you're in cahoots. I see it. You guys are taking the same trade and doing it well. And let me find my pin. That's for you because you annotated your chart. Thank you for that. Termination condition creates the full reversal, right? That's beautiful. Odds favorable momentum. That's my favorite look. And again, you did break out of the fib, but you're trading into the fib the same way your sister from a different mister did. But with all that momentum, with that termination, you got in on such a low risk entry that it gave you room to manage. Beautiful trade, Cindy. Beautiful trade, Adriana. I want to meet your teacher. He sounds like a swell fella. It doesn't have to be hard though, right? And the advantages. When you start thinking in terms of advantages, it opens doors, guys. It really does. Beautiful trade. Beautiful, beautiful trade. And thank you for annotating. I know I'm a pain in the butt. And a chili dog from Ron. That is the ultimate. That is the ultimate. All right, D-Rock. Let's see. Continuation style. Did not reach the fib yet. So, hey, Farrakh, take care. Nice trading today. Let's see what we have. We had a termination that created the reversal. You had odds favorable. Two divergences print, and it pulls back to support inside of favorable large triggers. So far, so good. On the large chart, you let the small triggers get back in the direction of the trade, and I think that that's great patience, D-Rock. It looked good. It probably didn't work. It stopped you out, but everything's still set up above support. So you just let everything agree again. Market flow even confirms it. And you take quick profits at the first divergence, and you take second profits up here. I think you did a nice job because sometimes they don't work, right? But you waited for everything to agree again, and you said they didn't make the darn fib. That is great train of thought. That is beautiful train of thought. That's solid chart reading. And then let's look at this one. And that's kind of the same look, right? So odds favorable and it pulls back to support. Your small triggers are against you, so this one isn't quite as favorable. So what you're running into is on this particular look, it can be a little damaging. This can be a little more problematic because the smalls are against you and coming. You're placing a bet on whether support holds or whether it continues. By letting the small triggers roll, you create advantage. By taking a pullback to an area inside of them, it's good for for a shot at it, right? For a low risk shot to see if it's really going to go up or is that what's going to get it down. What is G is greater than B? Mm, was it strong? Small triggers, but you're on the wrong side of everything, aren't you? You're on the wrong side of everything. And this is where I mess this trade up a lot. Greater than the fibs. Okay, cool. You're on the wrong side of the large triggers. You're on the wrong side of the large triggers. The smalls are against you. If I'm going to take a low risk shot, I dig it because it's a bad top support holding and going. You took the absolute best shot at it. And I think that you did it well. It's a good recognition. But I also want to talk about the challenges on this particular look. When when your smalls are below the large and they're flat and lifeless and you're coming from HVAs, that's a tough look. When you're below the large triggers, that's a tough look. One of the things that I've incorporated into my own trading, D-Rock, and this isn't a rule or anything that I teach in class, is I like to be on the correct side of the large when I'm looking for a continuation. I want to see those large pull down and let me get the small above it. I find that it creates a little more of an advantage for me. And the likelihood of me winning is a little bigger. And even more so when I have a gap to those large triggers. Um, so it kind of closes the gap. I think it's a good read, and it looks textbook, except for you just have to know what you're up against. And as long as you're going to manage the risk, it's solid. Good job, dude. Ron, hey, look, Ron does lose $1,500. He took 10 trades, 90% profitable, lost 75. Great day, Ron. Can it be done, guys? Yes. And that was to answer today's question. Yes, everybody loses. Even Ron. I usually sit around 60% winners, which means I lose 40% of my trades, guys. But the ones that I lose, I take small losses on. All right, D-Rock, everything says down, 50-50, no divergence, beautiful entry, and just outstanding. What a great job. Probably could have held that second one a little bit too. Nothing ever blinked, but you said, you know what, divergence low? I'm cool with that. I love it. How much is that? How could you ever be mad about? Hold on. From 50 to, what was that 1950 to 1750? So there's your $100. And then another 7 points on it. 437 in 2 minutes. You're one of those fancy big city lawyers. That's not a bad profit. What if all you did was wait for it to be perfect twice a day? Not too bad. And then Ron taking a loser. It happens. Cost of doing business. Sometimes they get you. And then Ron one more. Chili dog bar. Amen. And guys, that's the running joke. When you do well, if Ron gives you a chili dog, you did something right. Pretty awesome. That's our second hour. We've made it through all the pictures. Miss Cindy got a heart. The NASDAQ is absolutely screaming to the downside. Somebody mentioned big trending market, right? The one time I'm willing to take it outside of favorable large triggers and when I'm in a strong trending market, and I'll sell that mid band until it stops working. You guys see how three divergences pushed it beyond the best entry? But what else do you notice? That all the triggers got below support and it's acting as resistance. And then D-Rock, that's your entry, right? Everything starts to break, everything starts going down again. You wait for the slop to end, and then that's your shot if you're going to do it. Yep. Well, the three divergences did their job, didn't it? And this is the NASDAQ. I don't know if you're watching the NASDAQ. So three divergences may terminate the trend, or it just may give you a deeper push. And what it did is it pushed you beyond the best entry. And it pushed you all the way up to here, where you don't have an entry, right? And then what did it do? All the triggers remain below the area. The small triggers roll over and they're strong. The large triggers are actually down rather than against the trade. And then you've got this pow. And it's still not a high probability trade, but it's a pretty cool later in life. I'm probably going to take this one. Well, and they're not quite, but they're working their way. They're inside the synthetics, right? Everything is below the resistance. They are above, but they're all angled the same direction. NASDAQ's a little different. I don't know, GWC. You want a crazy admission right now? GWC, I couldn't name one company on the NASDAQ. I could not name one company that's traded in the NASDAQ um, group. Not one. Because I don't trade the companies in the NASDAQ. I trade the NASDAQ futures, which takes the NASDAQ as a whole. And I look for my opportunities here. I don't have any idea. One company isn't better or worse to me. The only thing that I'm worried about is whether or not my rules are met. And I know that sounds like a Sunday school answer. The only thing I ever concern myself with is whether or not my rules are met. And if they are, I don't care if they're met on the NASDAQ or crude oil or the S&P. It doesn't matter to me if it's Tesla stock or Apple stock. Um, uh-oh, furnace out? That's no good. All right, before I take a break, that's a termination, right? No more long trades. Does everybody see it? Everything was going up. We hit resistance. The triggers don't break. And you guys said absolutely no more. But what did it do? It's not a strong top, right? Because the large triggers are still up. Does everybody see it? It's not a strong top. It hasn't reversed. Price pushed all the way down to Fibonacci support. How many trigger lines broke through this area of support? None, right? It is. It is 304. I think. Hold on, GWC. Don't get me lying. Yep, NASDAQ is March '04. Do you guys see how not one trigger broke through support? Oops, sorry. What does that mean? That means that I have a termination condition at the high, and I also have a termination condition at the low. My background is red, but my large, no, not a good top yet, Andy. What's the recipe for a good top, brother? Has anyone taken the time to write down what the recipe for a good top is? Does anybody? I'm going to remind you. If price reaches the area and no triggers break, that's a termination. And absolutely right, Andy. When it creates the reversal, that's when we'll call it a good top. So until these large triggers roll, it's just a termination keeping me from going long. But I'm also not going short. Remember that 90% of what you do is sitting on your hands and doing nothing? We're at that point. No, you're good, man. Make every mistake, Andy. But never be afraid to shout out in the room. Never be afraid to answer a question, even if it's not the right answer. Guys, I make bad choices and wrong answers all the time. Resistance hasn't broke. Support hasn't broke. It doesn't matter what color that fib is because my triggers don't agree. They don't agree with one another. They both don't agree with the background. I don't have momentum. I don't have a clear path. Guys, this is the dreaded let's make a sandwich pattern. Let's go walk the dog pattern. Let's go do anything other than try to make a prediction because I don't have any advantages. And if you haven't taken a trade in 20 minutes, guys, you're chomping at the bit. You're like, oh, but I just want to go up because the large triggers are up and I'm coming off of support. No, no, no. I just want to go short because that was a termination condition. And the background is red. And the reality is, guys, is there's just nothing to do. Welcome to being a trader. 90% of your life is doing absolutely nothing. Everything says down, bad bottom, right? We didn't reach an area, which means that the mid band is my first potential bounce point. When it does pull back, my mid band's caught in between triggers. I don't have areas down here. I don't have areas up here. And NASDAQ traders, do the small triggers say go at the mid band or do they say sit on your hands and don't do a damn thing? What do you think? This is important for you NASDAQ people. This is a lesson we've talked about a lot today. If my triggers are screaming against me, sit on your hands, right, Tony? Sometimes it's not the money you make, it's the money that you don't lose. If you waited for a close on the correct side because you were convinced that's the best look ever, you had the opportunity to make a little money. But if you wait for everything to agree again, it'll become even easier, guys. Just sit and wait. I'm going to take just a minute. I'm going to go stretch my legs real quick. If I sit in the chair too long, things go south. So I'm going to mute. I'm going to go mic silence. When I come back, I want you guys to lead the class. I want you guys to tell me what we're talking about. There's my picture, so you don't wonder why it's so darn quiet. I'll be back in about 5 minutes, and then we're going to finish strong, y'all. Back in a sec. Strong. Cav, let's see what you did, bud. Can you guys hear me okay? I think my headphones just disconnected. I am trying to reconnect them. If I sound, that should be better. Um, Cav, let's see what you did. Cav has a bad bottom. Sounds funny. But he has odds favorable, right? Divergence prints. Cav knows through chart reading that mid band is probably his best bet, right? So I want you to see something. He doesn't jump in hoping, he doesn't jump in wishing. What Cav does is Cav says, let things turn. Let there be some indication that it's probably going to go up. And sure enough, he lets it pull back. And then as it starts to go up, Cav goes, oh, I got to get that one. And they came back a little bit, but he knew where his stop should go. He knew where it was, where it should be. And sure enough, it went exactly where patterns told him it was most likely to go, back to that midband, back to that fib, because divergence from the low on a bad bottom loves to retest. And Cav, perfect, picture perfect job capitalizing on that. And he's absolutely right. It's patience, guys. If you just wait, it's gonna happen. And then Joel, weak triggers, divergence. Is this the NASDAQ? This isn't the NASDAQ. Um, why do I do this? You are human, dag nabbit. But Joel, that one was into the termination, right? It's okay to miss it. After the fact, you see this. Um, oh, here we go. After the fact, you see this and you're like, man, I should have gone short, right? I should have gone short. Well, should you go short into a termination condition? Does it win more than it loses? Typically not. So why beat yourself up? I think you did an awesome job following your rules. It's just not always your money, guys. It can't always be your money. The old John Novak analogy. If you walk into a bank and you say, give me all the money, right? You're a bank robber. You're a felon. You're going to get hogtied and tased and thrown to jail. But if you walk into the bank and you say, hey, may I have my money, please? May I have that little bit that fits all my rules, that gets me in at the right spot and out at the right spot? Well, then you typically walk away with your money, guys. Don't be a bank robber. And if you see someone running off with all the money, it's just not yours, right? You can't get mad at the person in front of you that withdrew more money than you did. Just take yours. Focus on what belongs to you and realize that you don't have to catch every move to be successful at what we do. Not at all. And then NASDAQ right now, let's just talk about what we see. Bad bottom, straight to the mid band, comes back up, triggers don't agree, right? And now I've got a 50-50, but I don't have any areas inside. I'm directly into one-to-ones. My large triggers are up here, my synthetics. Nothing agrees. Can we all agree that this is not a good-looking entry for long or short, right? So maybe we sit on our hands and we wait a minute. We see if maybe it all comes together. Termination, straight to support, back to the pivot stop out. Man, they're killing us right now. We see something kind of cool though. Let's take a picture of this real quick. One of my favorite things to remind you guys is that patterns repeat themselves all the time. Patterns happen all the time. Patterns are why we are successful with what we do. Because humans do the same damn thing all the time. Up, down, fear, greed, all the same thing. If I go back to the tops and bottoms section and I go back to that one that reminds you guys that 90% of your day is spent waiting and 10% of your day is taking advantages. You guys remember when price reached resistance and then pushed all the way back to support and came up and created a pivot stop out? And we're like, man, I have to be patient. Price comes all the way up, reaches resistance, pushes back to support, creates a pivot stop out. Man, I have to be patient. I just have to wait for odds favorable and a clear path. It's the exact same look, guys. This is from 2021. I'm not sure which contract in 2021, but that was 2021. That was 3 years ago. And look at the reaction. If you don't think this is outstanding, I want to live in your world for a day. I want to know what's going on in your world that you're not so impressed that these patterns repeat themselves all the time. I think it's pretty cool. I do. What do you guys want to talk about? This is where if you don't give me a question or a picture, I start flapping my gums. Ron, go eat, man. Go enjoy it. Enjoy your afternoon. Great day today. 90% winners, $1,500. That's a great day. And that's a pretty normal day, I think, for Ron. We'll see you in the morning, man. Wow, that looks just like the manual too, doesn't it? From resistance to support, retest, pivot stop out, odds favorable. We'll see what happens. Good stuff. All right, soapbox. You guys asked for it. To minimize your learning curve. I'm going to say this again. I say it every day. To minimize your learning curve, guys, post your pictures in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? To be sure, you need feedback from us. We're here to help. I'm here to help, guys. I love helping. I love my job. If you place a trade on the simulator, you participate in class, there's no risk of losing your money. It's just simulators, participation. Um, you need someone to tell you what you did right or wrong when you're new. You're not expected to know what you did right or wrong when you're new. And this is a part of the educational magic that Nexgen offers new traders. Thank you for that, Cindy. Um, this really hasn't changed in 20 years. It's pretty outstanding, guys. This room used to be called the Pros Room 15 years ago. When chat rooms really kind of came to be, the Pros Room was run by a buddy of mine, Jeremy. It was run by this guy, James Garza. I'm not the first guy to do it. John ran it for a really long time. But it's always been the same. Post your pictures, get your feedback, fill out your spreadsheet. You're going to get to where you want to be. And it's pretty cool. It's cool how it works. The recipe has never changed. The rules have really been pretty consistent for, I would say, 20 years. Absolutely. Well, let's take a look. There was your first termination. Your second termination has the large triggers through, doesn't it? This is our line. Not a perfect top, right? It did reverse it. It is odds favorable momentum. My small triggers haven't broken this fib yet. Not yet. My large triggers haven't broken this fib or this fib. So what I'm looking at right now, Josh, well, it turned. I don't know why it turned because the sellers wanted it to turn. I've got two divergences, but my trigger lines are through. I don't have any trigger lines through here. Let's go back to the live now. So what am I looking at? I'm looking at not a great top. This, no matter how pretty it is, it's not a great top. The only way this would be a great top is if my termination condition were here and the triggers didn't pass. Does that make sense? So with a weak top, how about this? With no triggers through this fib, how about it may bounce at this fib, right? With no triggers through that fib, the mid band's down here, it may bounce. It may come back up. I don't know. I don't know if it will or not. But I know that this is less likely to work, especially if divergence prints over here. But do you see how the market almost stood still right at this spot? Look how it's just not even moving. Does everybody see that? It's not doing a darn thing. That's because buyers and sellers are fighting. Neither of them can take a foothold. They are smack dab in the middle of a decision-making point, Josh. And it's tempting to take the short, right? And the short may work. Or it may go up and that bad top, and those guys might run all the way up to 74.80. I just don't know. I don't have enough information to feel good about it one way or the other. Does that make sense? Is that the read you got? Cool. And the cool thing is if it decides that it's going to go down, it'll go down. The triggers will break through. Look at the split on the triggers. The only area that you have inside of a trigger is 72.60, 73.60. That's the only line inside of a trigger. And look at the gap on the triggers. Is it going to go from here? Is it going to go from here? I don't have a termination. This isn't a good top. Yeah, I don't know. All right, Mike B, sit on your hands, brother, right? Weak triggers. What do weak triggers mean? They mean that it may push up a little further, and it sure did. Great picture. Are you using Capture or Snagit, Mike? Oops. I just opened NinjaTrader 8. Capture? Okay. Let me pull up my Capture real quick and let me help you out. It may not let me. Hold on just one second. I'm going to show you how to get both charts on there. And it's not too hard, so I have to go to my task manager and kill the old process of it. One second. And man, I did this forever in the beginning until my brother finally said, all right, let me show you a quick trick. Hey, Josh, have a good one, man. Thanks for being here. All right, so my capture software is going to come up. And look at that. It did make it to the area inside of favorable large triggers. We'll see what happens. But at least rule number 3 kept us in a good spot. All right, so with my capture software, Mike, when you hit that big button, if you only hover over one of your charts, it's going to get just one of the charts. So like this will only get my small chart. This will only get my big chart. Left click on your mouse in the upper left-hand corner and just go diagonal all the way to the bottom. And then when you release it, what it'll do is it'll give you both the small and the large charts on your picture. A little bit of practice, it'll become second nature for sure. Maybe. Because that was your large chart that you got. I'm not sure. And I think Josh split. So it is a termination, not a good top. Triggers weren't through, no divergence. If you took it from there, you still traded without it broken, but you did trade with a lot of momentum. You can click the left chart and pull the window over. Yeah, that's what I do. Is I will just click and drag. So like when I'm over here, I left click and I drag all the way down, but I don't know. I've also done things and it's kind of funny. Jason says you need to reboot. Man, if Jason says you need to reboot, I'd reboot. The only thing he can't fix are the things that are not broken. And Mike B, I don't think you had a green check mark next to your name yesterday. Congratulations and welcome to the family, man. Now the work starts. Now the work starts. You guys can't see it, but I smile like a school kid all day long when I get to talk to you guys, when I get to look at your charts. This is really it's a kick for me. Um, what else can I give you? For you guys that struggle with feeling like you need it all, for you guys that struggle with wanting to catch every trade and not the best trades, for you guys that think you have to make $1 million a day to be successful, this was a pretty good read for me. This is Emotion-free trading. It's only 100 pages. It's not a tough read. But it talks a lot about just the psychology that goes into trading, the idea that where your brain lies. It's a good one. It really is. It's definitely worth reading. Um, Trying to see what else I have here. I've got all the pictures, right? The plan's pretty much been the same for a long time, guys. John has pictures from 2004 of the exact same thing that we're looking for in 2024. And it starts with termination conditions. And when they reverse the market, opportunities abound, right? The first one is one that you guys will catch a little later in your career, the HVA trade. Using that market flow chart, using a high volume chart, letting a small chart roll over from a termination, and taking your first shot to go the other direction. And then when everything agrees, just doing that trend trade, right? Until you reach the next termination. And then rinse and repeat. And it really has been a simple recipe for decades. And it really has been a consistent recipe for decades. As long as I can remember being a part of Nexgen or watching Nexgen, it really hasn't changed a lot. It's gotten better. It's gotten easier to read. But it hasn't changed. The theory has still been the same. Fibonacci is an amazing indication of where the market is likely to stop. And when you trade to it or from it, it creates an advantage. When you trade into it, the advantages tend to go away. And that's why, even though after the fact this looks beautiful, this is still a trade where the triggers hadn't broken yet. And the same way they hadn't broken yet up here, and it's okay to sit down, and relax and wait for a minute. So, what else do I have for you guys? My favorite phrase in all of trading, because we're not in control. The only thing we're in control of is whether or not our rules are met. When you stop expecting to win every trade, when you stop putting that unrealistic pressure on you, whoops, wrong picture. Um, when you stop putting that unrealistic pressure on you, you start winning most of your trades because you realize that you're not in control. You realize that the market is nothing more than a series of up and down ticks. That's all it is. But those, Mike, just wanted to prove to yourself you could do it. You and I would get along in a social setting. You said I can't. I'm gonna. Watch me. Um, the less pressure you put on yourself to win and the more pressure you put on yourself to be consistent with your rules, the more likely you are to win, guys. Tiger Woods doesn't score low because he wants to make birdies. Tiger Woods scores low because his mechanics are sound, because the process to hit the ball where he wants to hit it is solid. The same reason McGuire hit home runs, right? It's not because of anything other than his mechanics, his reaction time. Everything had been tuned into where he needed to be. And I realize I'm old and I'm using old people. Um, But the process yields results. It always has. For as long as I can remember, the process yields results. And the more you submit to the process, the more you release the desire to be right, and you embrace the desire to just follow the right rules, right? Odds favorable, clear path. There's my reversal bar. This represents my lowest point of resistance inside of favorable large triggers. And if I draw my window of opportunity, this represents my highest point of resistance. What I've just done is I've taken the advantage of direction, red, I'm only looking for shorts. I've taken the advantage of momentum. Smalls below the large are wide, they're angled in the direction of the trend. And now I've refined that on a smaller, faster chart to the point to where the market is most likely to continue. And what I've done is I've just defined a high probability trend trade. And I'm not telling you to take this trade or to activate that limit order, but I'm saying that if I'm following the KISS plan, I'm obligated to take this trade. And it might win and it might lose. And I might make money and I might lose money. And I am 100% okay with the fact that I don't know what the result's going to be. But what I do know is that if I take this trade 100 times, I have gone back, I've studied, I've looked at it, I have more than once taken this picture, and I know that this is a trade that typically wins more than it loses. I know that this is a trade that's repeatable, This is a trade that has a history. This is a trade that I can scroll back and look at pictures and understand that this is where my statistical advantage comes from. That's what we're doing right now, guys, is we're developing trust in the methodology. We're developing trust in the idea that we're not in control, but the patterns are repeatable. And it's either going to happen or it's not. It's either going to give it or it won't. It's either going to get there or it doesn't. Um, you're not getting the synthetic triggers, E. Webster. So let's start with what market are you building? NASDAQ? Oh, you're not getting synthetic fibs on the ES. And it's NinjaTrader 8, and you have tick data clicked. So when you right click and you go to data series, there's going to be a box that says tick data. Is that one clicked? Can someone with 8 open give me a picture of it? Or I'll try to open up my 8 real quick. And we'll see what we can do. All right, I've got mine coming up, so I'll get a chart up real quick. Divergence got you on the ES, no trade. This is crude oil. What's your ES look like? Oh, that's NASDAQ. You know what? I don't even have the ES up. Can you show me a picture, Joel? On CL. But it's a clear path. Smalls are below the large are wide, they're angled in the direction of the trend. Both small and large are below the fib, which means that my path is clear. Which means that one divergence I'm thankful for, because that might be just what it takes to push me back to my area. Divergence will keep me out of this trade if my triggers were divided among the fib. Does that make sense? And this is why it's so important. Okay, so tick replay right there. E. Webster. Click tick replay, and that's what's going to allow the synthetics to come over. See where my cursor is? Awesome. So this divergence I'm thankful for. I'm hoping that it pushes me to an area inside of favorable large triggers. I'm hoping that that little slowdown is just enough to get me back to an entry because I've got momentum and a clear path. Oh, you're welcome, Joel. This is why simplicity is a big deal, guys. This is why it's important to always focus on the simple first. What kind of trade am I taking? And if you talk through the advantages, you know whether or not you're taking a high probability or a medium probability. And if you're taking a high probability, well, then you know that one divergence doesn't freak me out, that it takes 3 divergences to get me out of that trade. Does that make sense? Josh, you said you were leaving. You can't toy with my emotions like this. I had created separation. I had closure. And that's the one, right, Josh? Aw. Where you're like, man, it's just not perfect. I'm going to sit on my hands and see if the market gives me another opportunity. And it's okay. It's okay to miss one every now and then. And there may be a point where you take this one, where you don't hesitate on this one, where you say, it's still a termination condition up top, even if it's not the prettiest, right? And it's still odds favorable momentum, and it's still no divergence, and it's still strong triggers. And if I just wait for the pullback to the trigger where the only lines are, yeah, I'm willing to take a shot. That may be the next step in your trading plan. Well, guys, I think that's about it for me. Is there anything else before I split that I can do for you? Any questions I can answer? Anything you're wondering? I hope you learned something today. I really do. I hope that you had an aha moment. Miss Michelle, I see you in here. Hope you're doing well. Always nice to see you.